live Alibaba IPO event from our new studios. I'm Tracy Reineck, the Zacks Value Stock Strategist, and I'm here with David Bartosiak, the Momentum Strategist. And joining us for the discussion will be Todd Bunton, our Growth and Income Strategist, and Eric Dutram, our ETF Strategist. But we really also want to hear from you, so definitely send in your questions. You can email them to mailbag@zacks.com, or you can tweet them at us at our normal Zacks Twitter feed, which is at Zacks Research, where I have Dave manning all the technology because it's not something I'm as good at. So we'll be getting the questions as they come in. So definitely send us your thoughts, your questions, and we'll try to get to as many as possible while we're here on the air with this event. But Dave, I know we haven't really gotten this question, but this is the third largest IPO we've seen in the last 3 years. There was Facebook, then there was Twitter, and now there's this one, the biggest of the three. But with the other two, we knew what we were dealing with. We had, Facebook, everybody was on it,
Right.
Their kids are all using it, so there were no questions about what that was. And then we have Twitter, where there were some questions, but it's still an American company, it's still in social media,
Right.
so that wasn't so strange. But this one, Alibaba, not only, it's Chinese, but what does it do? I keep hearing, oh, it's the Amazon of China, it's the eBay of China, it's the Google of China, it's the everything of China.
Yeah.
But none of it really tells me what it is.
Right. Well, it is. It's all three, right?
It is?
Pretty much, but just a little bit of Google gets sprinkled into there.
Okay.
Most of it is kind of eBay and Amazon. Most of their revenue comes from two giant online marketplaces that they have, and they dominate the Chinese online retail space. Something like 80% of the online purchases go through Alibaba over there. So it's two segments. One of them is Taobao, which is kind of like a giant online bazaar, sort of in the vein of eBay. So that's kind of where you get the eBay part of things. So this is where you have, entrepreneurs that are going out and selling their goods on the internet and trying to connect with the Chinese consumer. And then you have, on the flip side, is Tmall, which is kind of more Amazon-based, where you have established brands that are out there that are selling their product, to the Chinese consumer as well. So those are the two major kind of online retail parts to Alibaba. But then you have Alipay, which is kind of like PayPal, except on a much bigger scale. PayPal is something like 203 billion worth of volume that goes through there. Alipay is like 778 billion, so it just dwarfs PayPal right now. So it is, you get a little bit of the eBay, you get a little bit of the Amazon, and then you get a little bit of the Google, just based on selling. Part of their revenue that they get on the online retail space where they're selling is they have advertising that they're selling too. And I know Todd's going to dig into the numbers there in the nitty gritty, but that's where you get a little bit of the Google aspect too.
Now, how does the international part work? Because up until a week ago, when Todd told me you could go on Alibaba.com USA version, I didn't even know you could go on it here in America. It's not a big part of what they're doing, not yet.
Right.
But is it, these other sites don't exist here yet, right? In the United States, Tmall and Taobao.
Right. I haven't seen any of that, but you can go to Alibaba and order, a bunch of dead mosquitoes if you want to. I mean, literally, it's crazy. There's just this huge variety of products, things that you wouldn't even imagine. But it's just it's just huge. It's colossal.
Okay, let's turn to Todd and see what's really going on with the finances, because I know he's really dug into the S1 here and the different components of this company, and he's going to fill us in on all the dirty details.
Yeah, thanks, guys. I dug into their F1 filing. That's what it is for an international firm.
Right.
But yeah, so Dave talked a lot about who is Alibaba. Really, in terms of gross merchandise volume, they are the largest online and mobile commerce company in the world. And just some interesting tidbits I grabbed from their filing was they had a mission statement that their mission is to make it easy to do business anywhere. And they really talked about being in it for small business and being a champion of the little guy. And that's Jack Ma's kind of motto there. And kind of looking long term, they always emphasize they're a long-term thinking company. And it was interesting, they said, they're aiming to build a future infrastructure of commerce, and they said they want to be around for 102 years at least. And why 102? Well, it's because they were founded in '99, and they said they want to span 3 centuries, which I thought was pretty funny. But so they do take a long-term approach of thinking. But as Dave talked about, they're really more eBay than Amazon, and I'd totally agree with that. With some Google sprinkled in, and they're more about this ecosystem and getting people on their third-party platform. And they do not engage in direct sales. They do not compete with their merchants, and they don't hold inventory. And because of that, they have a very asset-light balance sheet, very wide profit margins, which I'll show in a few minutes here, and also very strong cash flows. And like I said, they're all about maintaining and building that ecosystem. And the benefit of that is you get the network effect. So anything like Facebook or eBay, the more buyers and sellers that are on, the more valuable it becomes, and the more buyers and sellers want to be on it. So it just kind of grows organically and becomes just more and more valuable the bigger it gets. In terms of their different divisions, I won't rehash everything here. Dave talked about it. Alibaba, that's the name we all think of, but yeah, the Alibaba.com is their international wholesale business. That's only about 8% of their total revenue. They're really, Taobao, which Dave talked about, is their consumer retail brand in China, and the Tmall. And they also have different international segments. And actually, if people wanted to shop there, you could go to AliExpress right now and look at different items that you could find on an Amazon or something like that. And I actually looked, and their shipping, you can get free shipping from the Chinese Postal Service, but it takes about 25 to 35 days to get here. That was one product I looked at. So, not the free 2-day shipping that, Amazon Prime customers are used to. But Dave talked about this too. It's just a massive scale and size, this company. If you look at their total gross merchandise volume, now this isn't their revenue, again, because they're not actually selling the products, but the amount of volume that is going out on their websites, you can see just enormous, almost, that's in billions of renminbi, but just enormous growth as well. And in terms of active buyers, and these are people who purchased within this time frame, you can see nice, steady upward growth. About 279 million active users last quarter, so absolutely phenomenal. And how does this company make money? That's what everybody wants to know. You think, maybe they're a retailer, so they're selling products. Like I said, that's not the case. They actually primarily derive revenue from online marketing services, and which Dave talked about. It's like a Google model where people pay Alibaba to stand out on their website, essentially. And you can see the pay for performance is about 52%, so it's over half of their revenue. And this is fiscal 2014. In terms of commissions, they do collect commissions on some of their websites. There's only 11% of total revenue last fiscal year. It ended March 31st, 2014. But actually last quarter, that did jump to 26%, and that is one of their fastest growing segments. But yeah, moving on here, you can see the China Commerce Retail Division, which is the Taobao, the Tmall, and then another part that they have. That's 82% of the revenue. So that's the bulk here. Like I said, the Alibaba.com, that's less than 10%. The AliExpress, that's minimal. They also have some cloud computing services, kind of like Amazon. That's rapidly growing, but that's still just a minimal part. You can see the big chunk of the pie here is retail in China, and that's what they're focused on. Taking a look, as you can imagine, like a lot of tech companies, mobile is taking over, and this company is definitely benefiting from that. You can see about 20% of total revenue last quarter, but it's interesting because their monetization rates on mobile is less than traditional their traditional desktop computers. So the profit margins are a little thinner there, but those have been expanding, so they are making more money in that regard. Kind of like Facebook, Google, they all dealt with this, but they're all seeming to figure it out. So they're seeing their profit margins expand as they increase the monetization rates there. And let's take a look at a little bit more of the financial analysis here. I wanted to look at their growth rates year over year. You can see absolutely phenomenal. Okay, so they've basically been doubling net income, and revenue's up 40, 50, 60% a year. You can see income is growing faster than revenue. That's because their profit margins have been expanding. But you can definitely see which trend the growth rates are going here, right? So they're obviously slowing, but it's still phenomenal growth. And that's what I think attracts a lot of people to this, obviously. And like I talked about before, very wide profit margins. So you can see, throughout the years, 2010 all the way up, their gross profit margins, because they don't sell, they don't hold inventory and all that, it's right around 70% on average. And their operating profit margin has just been ticking up, up, up as they leverage their fixed expenses. Actually, last quarter, their adjusted net income margin was 47%, which is just absolutely phenomenal. So that means about for every dollar of revenue that they take in, 47 cents falls to the bottom line in profit. Compare that to Amazon, which is usually around 0%. You can see the appeal here. And finally, I tried to break down some valuations here. These are kind of my own adjustments. In terms of revenue per share over the last 12 months, they've earned about $3.76 a share. Adjusted EPS around $1.75. So if you take the $68 that it priced at, which obviously is probably going to open and trade a lot higher than that today, but you can see about 18 times sales, which is super high. But of course, they have the wide profit margins, so there's a little bit of justification there. And really, over the last 12 months, trading at 39 times trailing, that's not too bad for considering the phenomenal growth. So. Maybe not as crazy overvalued as some recent companies, but again, that's all based on the $68 share price. Good luck if you get in on that.
Thanks, Todd. I feel like you could be on the Alibaba Road show with this slide presentation. There was so much good information in there. So let me, just to clarify for my own understanding, the Amazon comparisons really isn't true, because Amazon has distribution facilities, they ship the products out. This is just Alibaba. You're going on there like eBay, you're buying the different items. They're just the middleman where they're handling the transaction, and then the wholesalers shipping it to you.
Yeah, that's exactly right, Tracy. The comparisons to Amazon, I don't understand. Dave hit it on the head. I mean, they're more eBay. They're all about being the guy that brings people together, right? The buyers and sellers, like a bazaar you would see walking through Beijing. So yeah, and because of that, that's why they have such attractive financials in terms of their asset light. They have very wide profit margins and strong cash flows. They've been profitable for years.
Okay, so my next question is, you kept saying phenomenal, and there are these amazing charts, and as I'm watching all your slides, I'm thinking, why, this is just fantastic. Why wouldn't I buy this company? But I'm assuming you maybe found some red flags in there, or something that made you go, maybe this isn't good.
Yeah. Absolutely, there were definitely a few caveats, and I have some slides here with me on that. Caveat emptor, buyer beware here. So let's just take a look at the corporate structure. Okay, so they're technically Alibaba Group Holding Limited, and they are a limited liability company registered in the Cayman Islands. So they've been incorporated there since 1999. And they mainly conduct its business in China through subsidiaries and variable interest entities, which are majority owned by Jack Ma. So very complex corporate structure. I didn't even want to put up the organizational chart here because it's just a maze. It's like throwing spaghetti against a wall and trying to make sense of it. It's very complex. So you're actually I have a slide here that I saw a little blurb in their F1 that said they conduct their business operations across approximately 290 subsidiaries. 290 subsidiaries and other consolidated entities. So very complex. You're putting a lot of faith in Jack Ma, who owns about 80% of each of those variable interest entities. And it's interesting because being Chinese, different mentality, versus the shareholder-focused model here in the U.S. Jack Ma has repeatedly stated that he'll put customers first, employees second, and shareholders third. Now, that could be kind of a marketing gimmick, really, saying putting the customer first. That Jeff Bezos would probably tell you the same thing at Amazon. But it's still, you just have to keep in mind that just a different mentality there. And another interesting thing is their corporate governance. Not a big fan of it. They have what's called the Alibaba Partnership. And when Jack Ma originally founded this in his apartment in 1999, he had a lot of these founders, a lot of these current partners that founded it with him, and they structured it They currently have 30 members now, but it's mostly for management there. They elect new partners annually. They have to be there at least 5 years. They have to own a substantial, part of equity. But it's interesting because they say that their partners are evangelists for the company's mission, vision, and values, and they're required to maintain a meaningful level of equity interest. So at least they are shareholder focused in that regard. But what's interesting is the partnership basically will have control of the board of directors. So they'll vote in a majority of the board of directors to maintain that control over the company. And SoftBank and YHOO, who are substantial shareholders, have agreed to vote in favor of whatever the partnership votes in terms of partnership nominees. So, it's interesting because being listed on the New York Stock Exchange, a U.S.-based company would be required to have at least a majority of its board of directors as independent. But because they're a foreign private issuer, they're exempt from this. And again, people need to realize that you're not buying outright, the common stock of this. They're American depository shares. Now, each ADS does represent an ownership interest in one ordinary share, which is deposited with Citibank. But throughout the F1, they stated that they will not treat ADS holders as shareholders. So you will not have any shareholders' rights if you buy this stock. So that's something to keep in mind. And finally, in terms of the accounting, I don't know if their books are cooked or anything like that. Just going through the filing myself, I noticed that their balance sheet didn't really balance, and their calculation of free cash flow was way off from mine. But I'll just chalk that up to my own error. But their auditor is PricewaterhouseCoopers. You think, oh, that's a Big Four. That's a trustworthy name. But they're in Hong Kong, and the PCAOB, which annually is required to go in and audit the auditors to make sure they're doing their jobs, doesn't really have access because the company is located in China. And some other concerns to think about if you're going to buy this stock is Alibaba and China in general has been known to sell counterfeit goods and pirated items on their websites. And you also have to worry about the monopoly. Dave had a statistic there that they make up something like 80% of the total online commerce there. China's usually not too friendly to monopolies or big business in general, so that's something to keep in mind if they end up breaking them up or just deciding to do away with them altogether. You never know, right? So it's just different shareholders' rights being a Chinese company. So that's those are the risks.
Okay, well, there's a lot to cover there. I knew there had to be some kind of red flag here because
Otherwise
it was
it's
too good to be
true.
Yeah, and there's always got to be risks.
Yeah, absolutely. One thing we didn't talk about though, the growth at all, right?
Right.
Because I was looking at just one statistic that I found yesterday when I was kind of digging through this. I know, Todd, you put up the earnings for the trailing 12 months, but 2016 estimates are like $3.35 a share. So that's a lot bigger than what we're seeing this year. So that
Right.
growth rate's pretty phenomenal when you're looking over the long run here.
Right, and that's what you're paying the high premium for here. One other thing, we're about 20 minutes into the trading session now. We haven't gotten word that it's actually launched, so we're just waiting on that. But Jack Ma was down at the New York Stock Exchange. He was ringing the opening bell, getting a lot of loving from the crowd there. It is an exciting moment, but they've done this before. They actually went IPO before. People don't even realize this. It wasn't here in the US. It was in 2007 in Hong Kong, and it was right at the peak of the market there, right before the Great Recession. So some people are kind of looking at that wearily. It wasn't great for them as a public company. They were public for 5 years. They ended up going back private because they had some issues with some fraudulent sellers on the site, and that became kind of an issue. And then, shares declined during the Great Recession. They had some issues with revenue growth and meeting the analysts' expectations. So they took it back private at the IPO price, and now here we are 2 years later. Do you think, Dave, that's also a red flag?
It's strange, right? I mean, how many
Yeah.
times I could probably count on one hand how many times I've ever heard of that even happening.
Right.
Right. But when we're looking at Alibaba now, it seems like it's a more refined company. It's more mature. They've got They've got a really good direction right now, and I
Yeah.
feel like this new incarnation is going to be a lot better.
So
than,
you think they
than what we saw
learned from
before.
those mistakes?
Absolutely, because
Okay.
I mean, you brought up some of the things like the counterfeiting, right?
Right.
You know, we're not the only ones that think about that. I
No.
mean, Alibaba, Jack Ma knows that's a huge problem
Yeah.
because he doesn't want to have that. You know, he needs trust throughout that entire marketplace. You know, the buyers have to trust the sellers have to trust the buyers, and having, you know, authentic products is definitely going to help, you know, that whole process. So there's certain safeguards they're trying to put in, you know, to fix that. And one of the ways they can do that now is through the Alipay. Because when a buyer goes ahead and they put up money to buy something, Alipay holds that money in escrow until the seller goes ahead and sends it off to the buyer, and then the buyer confirms that, yeah, okay, I got what I got was legit.
Okay.
So that's one of the ways that they're trying to fight that whole the counterfeit side of things.
So have we gotten any questions in from viewers?
Yeah,
Some-
absolutely. We've got a question from Mike Lewis across the pond. Even he's over in England, and he
Wow.
wants to know about YHOO. Now, before I talk anything about YHOO, I just want to know.
Okay.
I have YHOO puts.
Okay.
So I'm betting, and it's a short-term trading thing, and I'll kind of explain why. So he's wondering, you know, when's a good time to sell his YHOO shares?
Okay, now why are we talking about YHOO? Some people might not be aware, even though this was all over the news for the last, I don't even know how many weeks.
Right.
But YHOO owns a percentage of Alibaba, but how does that work?
Yeah, YHOO owns 22% of
Okay.
Alibaba right now, so that's a pretty big chunk. So what people have been doing is they've been buying YHOO as a proxy to Alibaba ahead of
Okay.
the IPO. Now, on paper, that sounds fantastic
Yeah.
ahead of these IPO deals, but I can speak from personal experience that that's not always the most fantastic thing in the world,
Okay.
because it doesn't really always work how you want it to. And I'm not saying this is going to happen today with YHOO, but when Facebook and Twitter, when both of those went public, there were several publicly traded entities that you could buy here in the U.S. that had a stake in Facebook and Twitter pre-IPO.
Okay.
A couple of the tickers are GSVC and SVVC. So these are closed-end funds that basically bought into private equity ahead of time, and then were publicly traded. So that was one way you could do it. So, you know, everybody thought that GSVC and SVVC were going to be fantastic ideas. We can
Yeah.
buy it, you know, a couple weeks before and just hold it, and we'll beat everybody. You know,
No.
the problem is, okay, is that if, you know, when the insiders get locked up, you know, whatever percentage it is, and they can't sell on that IPO date, how are you going to go ahead and hedge your position in that IPO? You know, if you're Mark Zuckerberg, you own a bunch of Facebook, and you're not selling at the IPO, how are you going to hedge against that? Because the
Right.
options don't come out for another week, you know, or two, or in this case, it's only going to be 1 week. So you have that risk, and you're kind of out there just kind of flailing, you know, hoping. You're not going to sit there and hope. You're going to short the proxy, right?
Okay.
You're going to sell those proxies. So what happened in GSVC and SVVC was just horrendous on these IPO dates. They just sold off as people piled on. Plus, you got investors who bought those ahead of time as proxies and now just want to buy the real thing.
Okay.
So you not only do you have the hedgers putting pressure on you, but you also have people who are holding that as proxy that were selling. So it's kind of a trading function that puts a lot of pressure on the stock, and that's happened in the past. Now, is it going to happen today for sure? No,
Okay.
but that's
there
one
are
of the risks
differences
that's out
this
there.
time too, right? With this deal, some of the insiders can sell today.
Right.
This I was shocked to hear as well.
Yeah, about a third of the
Yeah.
IPO shares, they can dump them today.
Yeah. And Yahoo, I know they're going to sell a percentage of their 22%, so that's going to take them down to about 16%.
Right.
But I'm not sure if they're selling today, next week. But they indicated they were selling this big chunk.
Yeah, they are selling, and I'd love to know exactly when so I could be ahead of that order.
Right, right.
But yeah, you don't know exactly when they're going to do it, if they're going to do it today, if they're going to do
Yeah.
it tomorrow. Who knows? But I think at the IPO price of $68, that put Yahoo's stake at about $45 billion, something like that,
Yeah.
if my math is right on that. So that's a big part of Yahoo's stock right now, the lion's share of what Yahoo's worth.
Right.
So it's going to be interesting to see, you know, what happens. Now, with that cash, I know Yahoo's talking about doing a special dividend and returning a
Yeah.
lot of that money to
About
shareholders.
half, I guess.
About half of it.
Yeah.
But they've, now you got a bunch of money. What do you do?
Yeah.
You were talking yesterday. Do you find the Alibaba of Latin America? Do you find
Right.
where do you go with that money, and what do you do?
So aren't shares of YHOO also trading, at new highs going into this today?
Yeah, they've rallied over the last few weeks. Yesterday was a pretty interesting day because I think we opened up like 44.30 or something like that, and then sold off throughout the day early on. In the after hours last night and the pre-market this morning, I know YHOO was up a little bit. Last time I checked, it was trading about 42, which is basically break even on the day. So we'll have to see what happens the rest of the day in YHOO.
Now, what about, there's a company called SoftBank that is, I think, out of Japan. They trade on the over-the-counter here. They own a big chunk of it too, but they've indicated that they're not going to sell any. Is that a play, or should, if I want to play one of these other owners, I should just stick with YHOO, not SoftBank?
Well, SoftBank owns more, right?
Yeah.
SoftBank's got 37%
Yeah.
of Alibaba, so that's certainly a way to gain exposure to it.
Yeah.
And the thing about SoftBank is, it's trading over the counter, right? So
Right.
it's like 40,000, shares a day.
Right.
So less volume. I'm not sure exactly what the market cap of SoftBank is overall, though. I don't know what percentage of Alibaba's
Yeah.
makes up SoftBank, but that's definitely another one of those kind of proxy sort of ancillary
Right.
plays. But you're not going to get, if you're investing in a stock like Alibaba, you want the growth, right?
Right.
You want to
Right.
get 100% of it. You don't necessarily want to have anybody stepping between you and that,
Right.
So it's an interesting way to play it.
Okay. What about, other ways to play it? We're going to bring Eric Dutram in here because he's our ETF strategist. And I know, Eric, there have to be some ETFs out there as a way to try to get access to this IPO.
Definitely. There's a couple ETFs out there, and I don't know if maybe you want to talk about the whole IPO market first as kind of a backdrop
Yeah,
here.
let's go to that because I want to know
'cause-
what the whole thing is happening.
Right, and actually we've seen a very strong IPO market so far. And sorry to everyone out there if you're hearing a little bit of noise. I guess they're really excited about the Alibaba IPO upstairs. So apologies for that. But for the IPO market so far in 2014, it's been a very strong one. We've seen more than $40 billion raised so far in the U.S. IPO market. And if you add in Alibaba's 21 billion, you can note that, hey, they make up about a third of the total IPO, kind of dollar volume in the U.S. this year. There have been 194 other IPOs over $50 million so far in 2014. And actually, we're on pace to see more IPO pricing than we've ever seen in the past decade. We had 222 in all of 2013. So we're at a pretty good pace right now to kind of break that level. And I actually got a lot of good stats here from companies called Renaissance Capital. They focus in on the IPO market. So they had a lot of good stats about some of the largest IPOs in history, so we can kind of see where Alibaba stacks up compared to a lot of the other big companies out there. As you can see, Alibaba is the biggest IPO of all time here in the U.S., just beating out Visa. And then we've got, we've got a couple other foreign companies on the list. We also see Facebook, but then General Motors. Also a lot of telecom companies. We've got Deutsche Telekom, AT&T Wireless. And then if you look further down the list, we've got Swisscom and France Telecom. As you can see over here, only a handful have actually been over $10 billion for their IPO. So Alibaba's really in rare companies so far here. And I think that's important to note just how big this company is compared to a lot of other ones out there. And actually, if we look at some of the global IPOs out there over the past decade or so, once again, Alibaba's the biggest from a global perspective too. But it's interesting to note two of the other really large ones, Agricultural Bank of China and ICBC Bank, also from China. These are also over $19 billion. And so we've kind of got a China top-heavy focus here for the largest companies. And then if you look, we also see a couple of Japanese companies on here. And Visa actually only barely cracks the top 5 in terms of largest global IPOs. So it's really kind of been a foreign-weighted market in terms of the initial public offering world over the last decade or so. So I think that's important to note. And, if we're going to see more foreign companies possibly go IPO in the next couple of years here, might want to look to emerging markets as kind of the leaders in this particular space. And I know one thing that investors are always looking for is, hey, what company is going to give me a really big pop on this first day IPO price? And actually, Alibaba's in pretty good company. If we look at a lot of the other names that are on this list, are actually Chinese companies. We see one of the top ones since 2001 is actually Baidu.com. It IPO'd at $27, saw a huge first day increase of over 350%. And actually, we also have YHOO and some more like American companies. I know Potbelly's a local company here in Chicago. They had a pretty good first day, 119% increase. Haven't really been doing too well since then. So you know, it's not always an indicator that you're going to have a great first year just because you have a great first IPO day. And I mean, a lot of retail investors aren't going to get in on these IPO prices or experience this first day increase either. So you know, definitely take these numbers with a grain of salt. If we go a little further out, over the last 12 months here are some of the largest winners and biggest losers for the IPO market. A couple of familiar names on this list. We got GoPro is one of the top performers in the last 12 months, 180% return. If we look at some of the losers, we're going to see a bunch of biotech type companies on here. And I think it's pretty interesting to note, if you look at the first day return, now granted it's not a foolproof method, but all the top 5 performers had pretty solid first days on the market, while all the 5 worst performers had subpar ones except for COVS. But once again, all the worst performers are down more than 50% in the last 12 months. So IPOs aren't necessarily a sure thing. So you're definitely a pretty risky market here.
You have something, Dave?
Yeah, perfect. I'm glad you brought that up. One thing, the limit orders are being accepted on Alibaba right now, so we're getting a little closer to the time when we kick off here.
Wow, this is early.
Yeah, and we are getting some questions coming in, and one of them is, you know, what's the best way to buy this open right now?
Oh, well, I'm deferring to you because I don't think I'd buy the open.
Right.
What do you think?
Well, that's a whole. I guess we'll open up that can later, but really just the mechanics of what if you want to buy this thing right now, you know, how do you do it, right? And what do you do at this second? Well, again, speaking from experience, I remember the Facebook IPO. We threw out market orders on the Facebook IPO and got filled at 42, but didn't know we got filled until like the next morning.
Wow.
But that was a debacle. I mean, everybody remembers that. The NASDAQ definitely dropped the ball on that one. This time we're at the big board. We're at the NYSE, right? So we're hoping that goes a little bit better, and it should. But the problem with throwing that market order out is what you're doing is you're basically just saying, you know, here, market maker, please make, you know, go ahead, do what you will, and they're gonna put you at the highest price they can and make as much money as they can off of you. So definitely use limit orders when you're looking at buying this IPO right now.
Okay, but what if I want to get in, I'll buy at any price, then I'll just use the market.
Yeah, use the market order. You will get
if
filled.
I have to get it.
You'll get filled,
All
but
right.
it's just a question of, you know, is that going to be the best price of the day?
Right.
You know, for you to get in? Probably not. You know, because you're basically just, you know, at the will of the market makers at that point.
Right.
So definitely try to put a limit order in, and you can put the limit up higher than your, you know, than the market looks like, you know, because you really want to get filled. So if the market, you know, if you're trading at 80, right, it looks like it's going to open at 80, and you don't think you're going to get filled at 80, you can put a limit up at 85 or 90, and when the market hits, it'll hit you. But if you throw that market order out there, you know, you could get filled at 110. Who knows? You know, you could be one of those short-term spikes that the HFT guys slap up there. You know, so you really got to be careful.
What about putting a limit under the 80? I was talking to some people yesterday who said they were going to try to get in at 74, 75, but the rumor is at least 80.
Right.
Will that work?
Well,
no.
it might. Who knows? You know, you won't get if it opens at 80 and goes higher, then your limit's never going to get filled, right? But you didn't lose any money.
No, that's true.
Okay, so if you put that limit down at 74 and the market comes and gets you, you know, then you'll feel a little bit better about yourself, you know, moving forward, especially if the thing starts to unwind a little bit. So there's really just no way of knowing exactly what's going to happen, just like any stock on any given day. We do know that it was heavily oversubscribed, you know, the IPO itself. So there was a lot of demand coming into this event, and it wasn't just demand here. I mean, this was globally. There was a lot of demand coming out of Asia for this stock. I saw that, you know, some stat that only about 8% of this book is going to go to retail at all.
Right. That's small, though.
Yeah, that's very small.
But how does that affect trading? That could be a good thing or bad, because the big guys are the one with the real firepower, but they're all in it.
Right. Right. So that's why you have to be even more cautious as that retail investor.
Yeah.
If you know that all the big guys have all the chips right
Right.
now and only about 8% of retail, and when I mean 8% retail, I don't mean your average, guy with even $500,000 or $1 million in their account. Those retail guys are way high up there.
Yeah.
Those are the top clients of the biggest brokers in the country right now that are getting a little taste of this, just as kind of like a thank you for participating in it. So it's not the average investor is going to have a tough time getting at the IPO price,
Right,
of course.
obviously.
But even in the beginning, you're going to have to watch out the first few days of this, I think.
Where should you not buy it? Okay, let's say it opens at 80. This is all, we're just speculating here. There's some rumors it could surge up as high as 100 or even more. Is that too dangerous? I mean, this is all gambling on the first day of IPOs.
Right. I mean, you got to jump into it and decide, why are you buying Alibaba?
Right.
Okay. Are you buying this because you're going to, get the stock certificate, put it in a drawer somewhere, lock it away, and forget about it for 20 years?
Right.
Are you trying to make a quicker buck? Right. So if you're looking for an initial surge kind of thing, I mean that's happened with recent IPOs. I mean GoPro, right, has had a surge since the IPO.
Yeah.
It's traded very well. So people who bought on the IPO date feel great, right? They're
Right.
making kind of shorter term, intermediate term money. But the Facebook IPO,
Right.
it took what? It took months.
Yes.
I think 16
it
months
traded
or something like that.
below its IPO price a couple months later.
And that's the IPO price, which nobody got at.
Right.
So imagine the people who got filled at
Yeah.
42.
Yeah.
I mean, now they're happy.
Right.
But
Right.
but it depends. There was definitely a whole lot of belly aching and people who were not happy with Facebook at all.
Right.
Early on because it
Yeah.
went down. After the IPO. So it's going to be interesting to see what happens with Alibaba. Do you want to get in there for a quick little trade, or do you want to hold it for the longer term? Obviously, the longer you put out that time frame, the safer it is because you don't really care initially what the price is. What does it matter? You're buying it for growth. You're buying it for the long run. But if you're looking to make a quick buck, a quick flip on it, that's going to be who knows? It's going to be a little tougher because one of the biggest parts about trading is having a frame of reference, right? How do we know if this stock is too expensive? Well, we have to look at what happened in the stock over the previous year or so, right? Or month or whatever. 52-week highs, that's why that's on every single stock quote that we look at, right? You have to have some kind of reference. On an IPO, there's no reference, right? And we're sitting here grabbing for straws going, oh, well, it's kind of like an eBay, it's kind of like an Amazon, so maybe we should value it as such,
Yeah.
You don't know until that stock starts trading and has its own personality and goes out there and bounces around.
You made a good point about if you're holding it for the long term versus just the trading, because it is two different things. And I remember when Google went IPO, it had a big jump up on its IPO, and then a lot of people, oh, it's too expensive, it's crazy. But people who bought then and are still holding it all these years later, they don't even remember what they bought it at.
Right.
Yeah. So there is a difference between
And they're
the two.
happy.
Right. Oh yeah.
Right?
That worked out well for them.
I remember I bought 5 shares of Google at 200.
Wow.
And I caught it and it went down 20%. It went down to 180. And then when it got back to break even, I shook out.
Wow.
I was looking for other things.
Yeah,
better
but you were
things.
trading it.
Right. I was trading it. I wasn't.
Yeah.
It
So
wasn't
two
a
different
long-term
things.
trade. Yeah. Exactly.
So do you want to get back to Eric and find out how we can invest in this IPO through the ETFs now?
Yeah, just a quick thing. CNBC is reporting an 80 to 83 open.
Okay,
That's what
so
we're
it
looking at.
is, the rumors
About what we
sound like
thought it would
that
be,
could be
yeah.
about true around that. So this, we'll have to
80
see when
bucks,
it
83.
actually launches. But yeah, how can I use ETFs? Because that wouldn't have been my first instinct to try to use ETFs to get into this.
And actually, Dave, I just wanted to note that Yahoo's actually up about 1.6% right now. So sorry about your put order, but thanks for reminding me about my missed opportunity with Google. Because
The IPO hasn't hit yet.
That's true. So we'll have to see how it does play out there. But on to the ETFs. There's actually a couple ETFs out there that can target Alibaba here over the next couple days. Granted, none of these funds hold Alibaba pre-IPO, but there are a couple ones out there that are going to hold it over the next couple days. And this might be a good option if you're thinking about getting into Alibaba, but kind of you're worried about some of the issues Todd brought up, some of the other contributors have been discussing here, but you still think, hey, this might be an okay opportunity, I want to get into it. Or maybe you're saying, hey, the IPO market has been really hot this year, this is something I definitely want to be a part of. but I don't really have a favorite name in the space. Fortunately, there's a couple ETFs that we're going to look at here that could allow you to get exposure to this broader market. The first is FPX. It's a First Trust IPO fund. This is actually the most popular IPO ETF on the market right now. Actually pretty interesting with this fund. Due to Alibaba's Cayman Islands incorporation, they were not going to hold BABA in their portfolio. However, just in the last 2 days, they came out and they said, hey, actually, we've changed our minds. We're going to add Alibaba after the close of trading on Friday, today. This is a pretty seismic shift for this fund, which generally just focuses on U.S. IPOs. I anticipate, and this is just a guess on my part, reading the kind of the fact sheet and some of the other prospectus items they have on their website, but Alibaba will probably make about 8 to 10% of this portfolio. There's about a 10% cap on large IPOs, but I do anticipate it to make up a sizable percentage of FPX. It's also important to note that new IPOs can be held for 1,000 days, 1,000 trading days in this fund. So you could have Alibaba in your portfolio for quite some time if you're holding on to this one. And you're going to get a lot more older IPOs in this product as well. You're going to get like your Facebooks, companies like that have been on the market for a little bit and have kind of started to perform and arguably are seasoned stocks already. If we look, there's another ETF out here. It's called the Renaissance IPO ETF. Great ticker here of IPO. And this will be adding Alibaba following its usual 5-day fast entry waiting period for large IPOs. Once again, I think it will be about 8 to 10% of this fund right here. This one's a little less popular than FPX, but it does focus more on the newer IPOs. So you're not going to get some of the older ones that have been around for 3-4 years. Right here, it only holds the companies for 2 years after their first initial trading day. So it is more concentrated, and you're not going to get any spin-offs here. But it could be a great option if you're kind of like some of the newer IPOs that have been coming out, and you do want the Alibaba, but you're not sure if you really like it as a long-term investment, but you still want it as part of your portfolio. Lastly, there's another ETF out there. It's called the Crane Shares China Internet ETF. KWEB is the symbol here. This is a relatively popular one, as you might guess based on the name. It only invests in China internet-focused companies. And it's important to note there are two China tech ETFs out there, CQQQ and QQQC. But this ETF holds companies like Baidu, JD, CTRP, and has about 40 companies in its basket in total. And this one looks to add Alibaba 11 days after the IPO. This will be the first tech ETF to actually add Alibaba. So I think that's something important to note. And if you really like the China tech space and you kind of want a decent-sized Alibaba allocation, but you want some of these other companies on this list, I think this could be a good way to do it. And one other thing, I think it's important to note what Alibaba won't be in for ETFs. Because it's on the New York Stock Exchange, it won't be in the QQQ, the NASDAQ 100 fund, which is a very popular ETF. And then it also won't be in VWO or EEM, thanks to being listed in the United States as opposed to in an emerging market. All three of those ETFs I just mentioned are some of the 10 most popular funds out there. So if Alibaba had, kind of been on the NASDAQ, been incorporated in, or not incorporated, but listed in a foreign market like China, it'd have to be bought by all three of these ETFs. So that'd be a nice cushion for this fund as it sort of, IPOs, and it has to be bought by these products. Definitely have to make up a big chunk of all three of those indexes. It might make it into some emerging market tech ETFs that are out there, but you got to kind of, go case by case basis. A lot of classification systems do have Alibaba as a consumer discretionary company because, they do a lot of retail stuff as opposed to being a tech company. So you're going to have to look on a case by case basis here, but it's really hard to say right now how a lot of ETFs are going to take that are focused on the tech space. Back to you, Tracy.
Yes, so Eric, I had a question about that FPX. I actually do own that ETF in full disclosure, but I thought there was no way I'm getting Alibaba, and if I was going to get it, don't they have a rule? Normally they would wait at least 3 months. They were the longest wait to buy the new IPOs, and now suddenly they're buying it on the day of the close? That's so strange.
Yeah, this is a pretty bizarre case. Even just earlier this week, they were saying that they weren't going to be adding Alibaba at all due to the Cayman Islands incorporation.
Yeah.
So, maybe they got a lot of pressure from investors out
Yeah.
there who are saying, hey, some of these other products are going to be adding Alibaba. This is a really popular company. I think part of the reason is, these IPO ETFs, they try and take a broad swath of the IPO market in general. And I think you can argue, how can you really say you're capturing the whole market when you don't have the biggest IPO of all time in there? So I think
Right.
that's part of the reason. It does seem a little strange that they're kind of adding it so quickly, but
Yeah.
I think once again it's part of this issue of how do we be best representative of the IPO market. And I think given some of the stats I was talking about earlier in terms of its size compared to a lot of the other IPOs over the last couple of years, it's hard to say that I'm representative of the market when I don't have this huge fund in there.
Right.
Right, and plus, if you think about it, they're trying to sell shares in their ETF, right?
Well, of
so
course.
you got to put a little sizzle on it, and one way to do that is the biggest IPO
Yeah.
on earth ever, right? So that's definitely something that they're
Yeah,
putting in there.
I'm just kind of surprised that they're going in the day of the IPO. I mean,
Yeah.
at least all the other funds are waiting, 5 to 11 days, it sounds like, and then this one
Well, they want to
normally
get a head
would
start
wait.
on them, right?
Well, yeah, could be good, it could
But
be
the
bad.
other thing I heard is there's no chance of this being in the S&P 500
Oh, really?
because of the way the
Because
ownership
of the way
was.
that's, okay.
Yeah.
'Cause it's with the Cayman Islands.
Yeah.
That's all interesting because and I'm glad Eric brought up that it's not in the QQQs because immediately my thoughts went to, oh, it's going to be in the QQQs, but no, wait, it's not on the NASDAQ.
Right.
So that's a good reminder for everybody because that is such a popular fund.
Right. Something interesting that somebody asked is, Jack Ma wants Alibaba to be bigger than Walmart.
Yeah.
You think there's a chance that could happen?
Sure. I mean, the consumers are there. I mean, just look at the numbers that he's posting out of China. They are starting to expand internationally, even though, as Todd showed, it's a smaller percentage. And there's going to be hiccups along the way. I mean, there's no doubt. But their total dominance in China just leads you to believe that, yeah, it's similar to the total dominance that Walmart has had for many years in the United States. I did see an interesting stat. There's many about this company, but one that said that Alibaba in China accounts for 60% of all packages shipped there. So, I mean, there's 40 more percentage
Yeah.
there. There's still room to grow.
Well, one of the things about that is in China they don't have a FedEx or a UPS. It's kind of a
Yeah.
roll of the dice. Like, are you going to get your package or not? How long is it
Yeah.
going to take? It's a really loose network of all these kind of shipping hubs that are in there. There's not one central company that's controlling all that. And Alibaba is actually starting to get a little bit into that too on the logistics side of let's mash these guys up together and make sure we can ship our packages a lot quicker.
Yeah,
So
they
there's
had an
room for
article,
growth there, too.
some woman who bought something off of Alibaba's site in Brazil, and it did take her 2 to 3 months to get. That seemed like a long time to wait for an item.
That is a long time to wait.
So I wonder if some of that is going to be, an issue for them going forward in expanding into the U.S. and Europe, especially.
Yeah,
Something
I mean,
to watch.
it's mind-boggling to think about China and what's going on there versus here. I mean, so many things we take for granted. Pony Express, we had that a long time ago,
Yeah.
right? And the networks that we have here with you can do UPS or Airborne Express, or
Yeah.
if they're even still around, I don't even
U.S.
know.
Postal Service.
Yeah, you can ship if it fits, it ships, right?
Right.
All these different ways, all these different options that we have to get things around. That's just not there. They just don't have that infrastructure over
Right.
there yet, and they're
Right.
building it every day.
Yeah. I don't know. Anything more coming in?
Yeah, we got another question of why does it take so long for Alibaba to open these trades, right? Why are we waiting?
Why are we waiting?
Why are we waiting?
This isn't so bad. Remember, Twitter launched at 10:49 Eastern Time. That was
Right.
a really long one to wait. Sometimes they launch within 5 minutes. General Motors launched literally within 5 or 6 minutes. I don't know how they did that one, because that was a big IPO, as Eric was showing. That was not small.
Right.
But there's just so much demand coming in, and the New York Stock Exchange wants to get this right. After Facebook was not good, Twitter ran more smoothly, but they just can't have the bad publicity of getting this one wrong, right?
Right, absolutely. And it's a huge IPO,
Yeah.
right? There's a lot of shares that need to be allocated and a lot of people that want to get a piece of the action. So they've got to make sure that they're matching everybody up, at the starting
Right.
gates, right? And go. They want to make sure everybody's perfect, ready to rock. They don't want to have anything like the Facebook IPO happen.
Have you ever bought an IPO on the day?
On the
of
day
the
of,
launch?
Yes,
Okay.
yes. Like I said, unfortunately, that was one of the Facebook
Okay. Okay. That's right.
throwing the market order
Yeah,
on
yeah.
Facebook. Yeah, that was so strange because you put it in. Normally, you put an order in and you get your trade confirmation, and boom, it's over. Well, put it in and it just said pending. You know,
Okay.
it was pending, and this is across multiple accounts too. Just pending, pending, pending. So you're
frustrating.
like, okay, well, and then you see in the real time. There was a few feeds we got that actually showed some pricing, and seen it moving up and down. And we just thought, okay, forget it, we're not getting filled. Tried to cancel the order, but then they didn't let you cancel the order either. So it was just kind of out there in space. You had no idea what was going on. So that's kind of one bad thing. I did have people buy on the GM IPO. We bought a little bit, and that went just fine. It was just normal, just like any other
Okay.
stock trade. You saw the price, entered it in, got the confirmation, boom, it was
Yeah.
over. So it depends on depends on the day, I guess.
Yeah.
Any given weekday.
Yeah. Do you think it's strange that they're going public on a Friday?
It's a little weird. I think more than a Friday, triple witching Friday.
Oh, I
Is-
didn't
is
even know it
what
was
they-
triple witching today.
Yeah, or quadruple witching,
Wow.
I guess you can call
okay,
it now.
so that's an extra.
Yeah,
on
it's
top
an
of
extra
everything
thing. All of these options are expiring right now, and contracts are rolling over. So that usually adds an element of volatility to the day. So now you've got, a highly sought after IPO, the biggest IPO we've ever had. And now let's throw in, the Scottish independence vote that we just had, throw in the
Yeah.
Fed thing that we just got on Wednesday, and stir it up in a pot and see what happens. I think it's going to be a pretty exciting Friday.
Yeah.
But yeah, it is strange to do it on this Friday for sure. Fridays in general, it doesn't really matter if you do it on a Friday or a Monday or a Tuesday.
I don't know.
Doesn't matter
That's
to
why I'm
me.
asking.
It's going to be an interesting
Seemed a little
stat
weird.
to see.
Yeah.
How do they perform on Fridays versus other days?
Yeah.
So, but yeah, it's going to be an exciting day. I'm fired up.
Yeah.
We're not live.
We're not
not
launching
IPO yet.
We're almost
Not
at
yet.
it. We're about 50 minutes since the open. This isn't too bad, but it sounds like we are getting closer from all the media accounts. But they're always trying to, keep us in suspense. Let's talk a little bit about Jack Ma, because we haven't talked about him, but I mean, he's such a charismatic figure. Like, there's all these stories of him starting it in his apartment, as we've discussed.
Yeah.
He reminds me of the charismatic figures of a lot of, American tech companies like Steve Jobs and Jeff Bezos. Is it a pro or a con to have a CEO with a prominent IPO like that's this charismatic and out there?
It's a pro, I
Okay.
think, without a question. If you just looked on paper at Amazon, right, you'd be crazy to buy it, right?
Right.
But if you read Jeff Bezos' book, now all of a sudden
the
you're
everything
totally
store?
you're totally on board, right? So you're playing the jockey, you're not just playing the horse. And I think that's what you're going to get with this. This is really the first time that we've had that face for a Chinese internet company.
Right, because who's the CEO of Baidu? I don't know.
I don't know.
You know,
There's
by
no
face.
Jack Ma.
Yeah, we know that.
Yeah, I couldn't tell you.
Okay.
I couldn't tell you.
Yeah.
So I think you need that. Here we've got our rock stars. We've
Oh,
got
yeah.
the Zuckerbergs and Elon Musk with Tesla, and you could rattle off 10 or 15 more that everybody pretty much knows. But now this is the only guy that you can name in China, really, Jack
Right.
Ma.
Yeah.
Maybe because it's an easy name to say too.
Yeah,
You know?
that doesn't hurt either.
No, but yeah, it's interesting. I was reading that in 1996 he was an English teacher, and now look at where
Wow,
he's
look
at.
at what you can dream to be.
Started from the bottom, now he's here.
Yeah, that's very inspirational. Well, he is among, if not the richest man in China as of today, right?
He's
I believe
among
that's
them.
true. He's among them.
He's among them. Well, let's see where we open, right?
Right.
But I think at 68 he was number 3 or 4.
Okay.
There's a few real estate titans that are above him, worth $22 million, something like that.
Okay.
A developer. I think this will put him at 11, a little over 11.
11 billion.
At $68 though.
Okay.
So then at 80, that's more money in the pocket, right? So that's
Yeah.
closer to 14 or 15 billion.
Does it scare you that he owns such a huge percentage of the company? And all these various entities, like Todd was explaining, that he has these big percentage ownerships and all the hundreds
It
of
is kind of
subsidiaries.
strange. I feel like we had a similar concern with Zuckerberg though, didn't we initially? Because of the way that the Facebook shares were structured,
Right.
where you didn't really get the voting rights and you
Right.
still kind of control. So you're still going to have that with Alibaba, but it's even more confusing.
Right.
You know, like Todd said with the spaghetti.
I mean,
you know,
yeah, I
it's
mean,
like,
there would
where
be
does
some
this go?
questions even about, you know, what if something were to happen like his death or something like that, not to be morbid or anything, but you would have issues if he's such a huge ownership of all of these other entities within Alibaba.
Yeah, and then, that's it's definitely an
It's
issue.
another risk.
Yeah, another risk that's out there. And I think you're going to see some of that get priced into this thing, you know, because it's not a sure thing, 100%, everything's fine, it's perfect, boom. Of course we're going to find ways to pick it apart and say,
Right,
okay,
of
well,
course.
here's some of the negatives. But, you know, when we're looking, these numbers are just staggering, and it's going to be hard to look at Alibaba and say, no, there's no way I'm owning it.
Right.
You know, it's like,
Now, why do you think then, because the numbers are phenomenal, that only 8% is the regular retail investors? Why aren't more retail investors?
they didn't have a
eager?
chance. I
Okay.
think they wanted to, but they didn't get any of that.
Okay, so but we could see over the next week or so a huge surge in the retail investor, do you think?
Yeah.
Okay.
Yeah, I think there's been a lot of retail demand for it, kind of across the board. I've got a few friends of mine who got clients into the private equity offering ahead of time, but they're locked up for 6 months on that. But there was a lot of interest for it. A lot of people put in their indications of interest, their IOIs, and didn't get filled. There just wasn't enough. There wasn't enough supply to satisfy everybody, really.
Okay.
So the retail investors are definitely going to get in a little bit later on this one,
Right, they're always the last, for
unfortunately.
good or bad. Yeah, usually
Yeah.
bad.
Yeah, but you know, with the growth numbers that Alibaba has, as long as the market doesn't, you know, fall apart around it, and that's another thing that we're seeing a lot is, you know, what's Alibaba's effect going to be on the rest of the market? What's it going to be on the other Chinese internet names? You
Right,
know,
I've gotten this question from numerous people, like what will it do to everybody else, even if you don't buy it? So, I mean, it's just so massive.
It's you know, you can make the argument for both sides of the story. Initially, it's that whole the proxy argument. So, are you going to sell your other Chinese internet names to get the Rolls Royce of Chinese internet names? Yeah, you probably will. But over the long run, I think what you're going to see is when Alibaba has a great quarter and great news, it's going to lift all the boats. That the other ancillary Chinese internet names are going to come back. And there's still a lot of, you know, mistrust surrounding these Chinese internet companies because, you know, I don't really know if we don't know what Alibaba does, what do we know about some of these other, you know,
Right.
smaller companies that claim to be, oh, I'm the YouTube of China, I'm
Right.
the, you know, whatever China, trying to draw all these parallels. But we really have no idea unless you speak Chinese, and I don't speak Chinese,
Right.
and my Google Translate doesn't work as well for that. So I think initially you're going to have that proxy trade, but over time it will kind of boost the rest of the Chinese internet space. And then for our market, again, it's not really connected to any of these major you know, indices, so I doubt that you're going to see this have a huge impact. You know, it might kind of be, you know, non-market correlated in kind of its own weird way.
Now, do you think once they actually start, again, reporting quarterly results and all of that, that this company, just given its sheer size, because I read somewhere that it was 3% of China's GDP, that analysts could actually use the financial results of this company every quarter as a gauge on how China's doing economically, couldn't you? I mean, they always just, you know, where GM goes, so goes America, and then it kind of shifted to Walmart, where Walmart goes, so goes America. But couldn't you say the same thing where Alibaba goes, so goes China?
You can't. Alibaba's so unique in that not only is this a bleeding edge sort of technology kind of driven economy company, right? But this is happening while the whole of China and the Chinese consumer is finally emerging as a global player.
Right.
In a lot of these, like on Taobao, you have these Taobao villages and these Taobao entrepreneurs where these guys were literally in school and then decided, you know what, forget it, I want to start selling things on Taobao. And they're building their own online stores and presences, and then they start building their own brands, even making their own products. So that Chinese entrepreneurial rush is coming from this. It just is revolutionizing, China, really. So yeah, I think you're going to be able to put your finger on the pulse of the Chinese economy by looking at what's happening. And you're going to have to look beyond just the numbers and the profit margins and the growth. You got to look to see the inner workings and dynamics of what's exactly happening with Alibaba and how is that affecting the rest of China right now.
Okay. Great.
I'm getting more fired up
I
about this
know.
thing the more we talk.
Yeah, I mean, after Todd's presentation, I wanted to rush out and buy it, but I never buy Chinese stocks, as you know.
Right.
Because there's just been too many issues with the accounting and various other things, not with all of them, obviously, but it's been happening over and over again, so I just don't trust it.
You see, they're like bottle rockets.
Yeah.
It's like, I don't really know what they're made of. I put it down and light it on fire, and it goes up, right? And then it comes down to earth, and you're like, oh, what happened? That's what these things are. It's like, oh yeah, it's great. It's the, again, I keep saying the YouTube of China or whatever it is. And then all of a sudden it kind of collapses, and then you realize, oh, I really didn't know much about this company. Yeah. And what I thought was their corporate office is actually, a papered over room in a strip mall in, Piccadilly, Idaho.
Right.
Whoops.
Right. But you'd think something of this magnitude, at least there'll be more eyes on it.
Yeah, absolutely. I mean, there's no question the legitimacy of Alibaba.
Yeah.
I don't think anybody's having that.
Yeah.
I think, this size and scope, there's been a lot of eyes on it for a while now.
Right.
Just like you said, they've been through this before.
They have.
You had this.
It wasn't good last time, though.
No, it wasn't good last time around. But, it seems like, it seems like there were some sweeping changes that took place within the company to, and this business model is interesting because, and I know Todd talked about it a little bit, but I was looking at the numbers, and it was funny because it was like stacking up with the Amazons and eBays of the world. So when we're talking about sheer volume, it just destroys them. It's like not even close, just 4 times the size, on the Alipay from the PayPal. And if you add up all of Amazon's volume and all of eBay's volume, it still doesn't compare to the volume that they're doing on Alibaba right now. So you get pretty excited about the sheer size of it. But then and the margins are fantastic, right? I mean, Todd was saying some 47% or something like that. That's crazy.
Yeah.
But the revenue numbers aren't stacking up in line with what you're seeing out of the Amazons and eBays of the world yet. And I think it's because their business model is a little bit different. But, which business model is better? You want to make a ton of money and have a low margin, or do you want to have a huge margin and slowly, incrementally increase that revenue? I kind of like this business model a little bit better with, getting those huge margins and just kind of leveraging that and adding on.
Yeah. Let's talk a little bit about competition. Obviously, they have almost none in China, but that won't always be the case, I'm assuming, even over there.
I saw one of them is, I think it's called Tencent, something. There's like a chat-based platform there that they're starting to evolve with, and then kind of backdoor other things, which is happening here too. I don't know if you're paying attention to your Twitter feed. You're looking at Twitter, and then all of a sudden it's oh hey, why don't you buy this based on the stuff that I've been messing around with on Twitter. So that's interesting that's starting to creep that way. So, but you're seeing those models, I think, already in some of these Chinese companies that are trying to creep in. So I saw another kind of flow chart, not like the organizational chart that Todd was referring to, but just of kind of their internet presence, and they're like, this huge chunk, like 2/3 of it is Alibaba, but then you have that Tencent, and then you have Baidu started to creep in, and they're all kind of starting to mix together a little bit, trying to get that dollar. But then that dollar base is not stagnant like it is here in the U.S. That dollar is increasing, across the world. I guess that renminbi is increasing, all over China. So it's interesting. I think there's still room for others to enter that space, but yeah, right now they're not facing stiff competition as of yet.
What happens when they try? I mean, they're in Brazil. Alibaba.com is here. Everyone is just assuming they're going to come marching in to the United States and Europe, and they can dominate there too. But can they? There's a lot of other presence here, even with eBay.
Yeah, it's going to be tough, coming in as Alibaba to leapfrog the Amazons and eBays of the world. I think they're going to get a little backlash from that, of these American companies that we have here, versus the Alibaba trying to come in. Plus, you still have that stigma of the cheap knockoffs from China.
Right.
That's going to be hard for them, really to shake off.
Yeah.
But even, I was on the Alibaba, Alibaba.com looking for, so that's why I was joking about
Yeah.
the dead mosquitoes, because literally you can buy dead mosquitoes on Alibaba. I don't know what you need them for.
No. How much were they?
Feeding bats, I don't know.
You
It
don't
was
know?
weird.
Do you have to like auction it like on eBay? Do you have to like put a bid in?
There's like a range. There's like a price
Okay.
range, and then you have to ask the supplier what what
Okay.
they're gonna. So it's a little different. But I was looking at Alibaba, and it's mostly like if I want to buy, I was looking at Carnauba wax, right?
Okay.
I'm a car guy, so I was like, I wonder how
Right.
much Carnauba wax I could get. So it was like $2 for a Carnauba wax, and
Is that cheap?
oh yeah.
Okay.
Oh, yeah. I mean, you spend like $30.
Wow.
Yeah, if it's the good stuff. So it's like $2 for Carnauba, but you had to buy like 1,000 of them.
Oh.
So it's like it's for you to
So-
kind of buy it and then label it yourself and then sell it. So it's almost
Okay.
like you
It's
can
geared
be
more
your
towards
own,
businesses, that
Yeah.
site.
Yeah.
Okay.
But the Taobao part, I didn't see any kind of U.S. based
Yeah.
thing
I don't
I can
think
use
they're
there.
trying to
But
compete
you did
there
talk
yet.
about AliExpress, which I guess that's how you get the advanced chicken coops, right?
Yeah.
The high tech chicken coops.
Right.
You can buy in California. But yeah, I don't see them coming in and dominating the U.S. market.
Okay.
Certainly not to the extent that they're dominating that in China. But the thing is, eBay or Amazon, if they really needed to go head to head with Alibaba, couldn't they just change their pricing structure a little bit to look a little bit more like Alibaba?
You would think so.
And then all of a sudden you've got a bigger brand in the U.S. and now the pricing is the same. How does Alibaba stand a chance entering the U.S. under those pretenses?
Yeah.
Plus, they don't have the network of shipping that the Amazon is
Right.
doing now. Inevitably, that's down the line, that's going to make it a lot cheaper for Amazon to be able to ship from here to there. If they get their drones, great, for
Yeah.
them.
That's a whole
It's
nother
going to be
level.
cheaper, and that's going to be an advantage that they'll have over somebody like Alibaba, who's going to have to rely on a third-party service to go ahead and do all their shipping.
Right.
So I don't see them coming in and having the
Okay.
same impact.
But they have so much more growth still to go in China. I mean, obviously their middle class is just starting out and expanding, and those consumers are going to be buying more as their economy improves.
Yeah, I don't know what the saturation is exactly there, even today. But when you think about how big that middle class is getting and those growth numbers across the board, even if they were 100% saturated in the Chinese market right now, and that was it, they had all your consumer dollars, those dollars are still growing and growing and
That's
growing
right.
and growing.
Right. They're
So
going to spend more
Yeah.
on the site, which
Right.
Todd's data was showing they're already doing. The volumes actually are going up.
Right.
So, and then they'll, as more money, they'll buy more expensive items and things like that.
Yeah, it'll
Yeah.
just keep going
Yeah.
upstream, and then eventually that'll be better for the revenues, right?
Right.
Because they'll be buying bigger things. So now you can charge advertisers more money to get their products higher up on the list that are worth more money. So the growth prospects do look pretty decent.
Right.
But one thing I was thinking was, so how does this collapse? Is there any way that this company, what are the headwinds for the company? I guess I shouldn't say collapse because that's kind of dreary, but what sort of headwinds could Alibaba face in China right now?
Well, I kind of saw one red flag in just the sheer number of areas that they're going into. Like, do they really need to be in the cloud? Apparently they own a stake in a professional soccer team. Do they really need that? They're going into media. They just signed a deal with Lionsgate to get some of their content, so they're going
Right.
into that. I understand these companies like to spread out and go into multiple areas, and they already are, but maybe they spread themselves too thin by not focusing solely on the things that, their biggest segment that's working, and going into these areas that do have more competition or that are going to cost them more to actually build out. Why why be in all of those pots if the other two or three are, really dominant?
Yeah,
I see danger there.
Yeah, and I think that's kind of a testament to Jack Ma, though.
Right.
He's out there and saying, hey, if I did this here, I can do this here.
Well,
I
yeah.
can do this here, and I can do. And one of the ways they're doing that with the Alipay, right? They're starting to creep into the banking segment. So Alipay, you can think of kind of processing, right, like credit card
Right.
processing back and forth. But so now when these customers are getting monies deposited into their Alipay accounts, they could go ahead and take that and deposit it into a money market account that Alibaba owns. Well, they do profit sharing with them.
Yeah,
So,
don't they also run some kind of big investment fund? Like big. They
Yeah.
actually run that. So that seems kind of strange to me too. That's what I mean about having all of these different
jack
hats.
of all trades
yeah,
thing.
why not just be really outstanding at one or two things? Why try to spread yourself? But obviously they see opportunities in these other areas. So they're going for it, but it seems like you could spread yourself really thin. I mean, Todd mentioned like 290 subsidiaries, I think he said, that were in the filings. That's a lot. It's a lot for one guy to keep track of.
I think it's almost like Charlie and the Chocolate Factory. When they first get into the factory and there's all that candy all over the place, right? So we don't want Jack Ma to be Augustus Gloop, right?
Right. I mean, look what happened to some of the kids in that.
Yeah, don't go falling into the chocolate river,
Right.
okay? Take it easy, take a step back, peck a little here, peck a little there, peck a little there. And that's because there's all this opportunity in China, right? That's
Right.
the candy that's out there.
Yeah.
Oh, I can make money here, I can make money here, I can do this and I can do that. So they've got to kind of resist the temptation and just gorge themselves and try to do too much at once. And they slowly have to kind of methodically, pick through. So that is definitely one way that they could kind of,
Yeah.
struggle. But are they getting the first mover advantage in all these different markets? I think
They have to be.
But then again, let's go back to the Amazon thing, right? We started selling books, okay? And now Amazon is in the cloud, right? You can buy your own kind of web hosting from them.
Yeah.
You've got obviously the huge shopping, online shopping presence, and it just keeps growing bigger and bigger. They start getting these different market spaces where you just never thought that online book reseller would get to.
No, that's true. So there have been examples of companies that have expanded far beyond their original platform and done it well. Do we have any more questions coming in, or we got to be near the launch now? This is getting up there for
Well,
the
it is,
Twitter
yeah,
the Twitter length.
It is, yeah, 10:42 New York time right now.
Okay, so it's got to
And,
be anytime. It was 10:49 New York time for the Twitter IPO. So why not go a little longer than that one, just for fun? Keep us all in suspense. People are checking, refreshing their pages, seeing if it's trading yet.
Yeah, me too.
Nobody's getting any work done. Only the guys upstairs who are pounding, in their
saying it could
construction
be-
zone. They're the only ones working. Maybe they stopped. Maybe this is a good sign. I don't hear anything.
Maybe
they
they're
stopped
watching
to
the
check
IPO.
it too. Yeah.
No,
they're watching us
New York
right
Stock
now.
Exchange is saying within the next few minutes, maybe here.
Okay, good.
They're saying maybe 5 minutes. So
All
get
right.
ready.
This is exciting.
This is. I'm pretty fired up.
Oh, wait,
about
we're going
this.
to Eric because he has an update.
Well, no, I just had
Oh.
a kind of a question for you
Okay.
guys. So this whole Alipay issue, I was actually just reading about this a little bit ago. Jack Ma had actually spun it off from Alibaba,
Yes.
and he controlled 46% of this. And then they didn't tell YHOO, who owns, I think it was 40% of Alibaba at the time. They told them 5 weeks after the fact that, hey, this is spun off now, and I own 46% of that. So
Right,
I'm-
they basically just removed it from the company.
Exactly.
That's not pleasant.
Exactly, and given some of these Cayman Islands, incorporation issues, I'm wondering if you guys think, granted, this is all speculation, but if we might run into a similar problem, down the line. Is this something we can't totally discount from this company, considering they've, kind of taken away parts of the investment before? And I was reading Yahoo was actually down 12% on that day following, the reveal that this was no longer in Alibaba. So I was just wondering if you guys had any more thoughts on that, and if investors should really, consider these types of issues when looking at these types of stocks.
Well, I think they definitely do with the structure and the way that they have, put together these 30 partners who basically have control over everything. Nobody else does. So they can do whatever they want. And they did it with Alipay. That was kind of shocking that they didn't bother to tell their biggest partner, hey, we're moving this out of there. So yes, I definitely think that this is an issue, going forward. If one of these segments becomes, of the 290 that Todd was talking about, decides to get moved out, will we even know? I don't know.
It's strange because now you're saying, okay, just because it's not owned under the Alibaba umbrella, maybe they could have a profit sharing agreement with them. right?
Right.
But then the way that these shares are structured is we're getting a piece of the profits from Alibaba as a
Yeah,
whole that's
they
coming
also
out. So we're
they,
not the
they
shareholders,
do have
so it's
right. I know with Alipay they do have an agreement of like a certain percentage goes over to Yahoo now, but that was only because they made this big stink. And they recently readjusted it more favorably to Yahoo. So if Alipay is ever sold off or spun off on its own, Yahoo gets like certain compensation and things like that.
Okay.
But that was just in the last couple of weeks this was announced. So I don't know. Like these things seem to be happening kind of on the fly. That makes me nervous.
yeah, definitely something to worry about a little bit.
Yeah. But okay, Eric, you're
And then I guess one other thing I was kind of curious, going back along with Dave's point earlier, I kind of question the whole retail interest by a lot of investors out there, just because, this is a company a lot of us haven't heard of before. And, granted, it doesn't have as, quite as intimidating of a name as some of the other Chinese companies out there, but, this is something a lot of people don't use. As we mentioned, it's kind of more for wholesale people. And I mean, yeah, a decent number of people might be familiar with Baidu or some of those other companies, but, JD or some of the smaller ones, I don't necessarily buy that this is going to have a huge retail interest by the average investor out there. I mean, we have the Amazon in America. Why do I necessarily need to go to China to get the Amazon over there, especially given all these issues that we've seen over with their structure and some of the concerns that we just brought up. So, I'm kind of questioning the whole retail investors are really going to surge into this one. I think it's been a lot of institutional investors really interested here. And then the Chinese market, they've really been very interested. I was actually just reading a couple minutes ago that most of the media presence at the New York Stock Exchange today was more from the Chinese side, and they're really outnumbering the American investment interest, at least from the media perspective, by a factor at least 2 or 3 to 1. So I think that's something definitely to consider for the longer term. And maybe this will change as people get more familiar with Alibaba, but for right now, I guess I just don't buy it.
Well, right now they're talking 84 to 86 now is a bid ask. So if you are going to buy it, you're paying a lot of money already.
For sure.
and that's where that's what the retail guy's getting already. Is they're already kind of pushing that up. But the answer, why do it with retail, is you want the growth and you want the China story.
right. But I mean, if people aren't using the product, won't it just kind of fade away? Like Eric was saying, I'll buy eBay, I'll buy Amazon, heck, I'll even buy Facebook because I'm using it. But Alibaba, yeah, it went IPO, it was big. I'm not that excited. That's what it seems like to me. I don't know. One thing I gauge, I didn't realize that, what Eric just said about a lot of the press being from China down on the floor of the exchange. But I'm going to look at the cover of newspapers, online, like USA Today and some of these regular newspapers that normally would cover this. It would be maybe the lead story, although the Scottish Independence might be. But at least on the financial pages, it should be the big lead story. And if it's not, that's going to make me think there's just not that much interest. But we'll see.
I don't know. It's weird sitting here. I just feel like it has to be the
Okay.
big story for today, kind of across the board. But you're right. In kind of the regular news media, when I'm watching Channel 7 at home, I didn't hear anything about
Right.
Alibaba or anything that was
Right.
happening this
And
week.
with Facebook, remember, I was getting asked by various family members, like uncles, aunts, like, oh, should I buy this IPO? They didn't care so much about Twitter, though. But Facebook, people were buying it to put in their kids' college fund and things like that. But you're not hearing any of that with this IPO.
No, and it is interesting that Facebook was kind of everybody.
Yeah.
Everybody was talking about it, which kind of makes you wonder but the way that the Facebook IPO went,
Right?
right? So maybe this one goes better because you
Because-
don't have aunts and uncles calling you up
That's
asking
right.
about it right now.
Yeah, good point.
But now, I mean, if you don't find out about it this week, when are you going to find out about it? When's
Right.
it going to be in the news again?
It's
of
not
a
on
big
its
deal?
earnings.
Yeah, unless they start creeping over here, or
Right,
Jack Ma's that charismatic.
right.
I
They'll have
I
to
don't
start
know.
going on, more television.
Yeah,
news.
is he going to start making
60
more
minutes.
appearances here in the U.S.? If you believe
Maybe.
that slide about shareholders being number 3, then
No,
he doesn't
yeah.
really care.
Right,
He's not
right.
worried about it.
Yeah,
So it would be interesting to see.
okay.
Then one other interesting fact I think investors might want to know, well, how do they get the name of Alibaba? Because obviously it doesn't really strike people as a very Chinese name.
No.
And I was actually reading that Jack Ma came up with this name by always asking, well, what do people always associate with this Alibaba character? And it's more of this idea of open sesame, and that Alibaba would be a way to open up the world of commerce to people all over the world. And then he had talked to people across the world and asked them, well, what do you think of when you hear the word Alibaba? And he said, no matter if it was in Asia or Europe or here, their first thing was open sesame. And he wanted to kind of connect those two concepts together. And that's really the idea behind this Alibaba name. And I think that's probably something a lot of investors don't really know, and especially when you consider compared to a lot of the other names out there that we see for these Chinese companies, that might be a little intimidating. So just a fun fact for everyone to note out there.
It's intimidating in a good way, or because I actually kind of think, well, I thought Alibaba was a great name. So I mean, after again we know some of the Chinese IPO names or company names like 52 Jobs, and there's that country kitchen restaurant chain, which tells you it's a restaurant chain, but that's a little dubious. But Alibaba sounds all intriguing and neat, and I don't know.
Just as long as the 40 thieves aren't following behind it, right?
Well, yeah. But that's interesting that's why he chose that. But
The
I think
whole
it's genius.
Open sesame thing.
Yeah.
Yeah.
Got to have a good story. Companies, like to have a good, that goes with your brand, the whole how it's founded and the charismatic leader and how they got its name, all this lends to its brand.
I wonder if he was watching Aladdin when he came up with that.
I don't know.
That's
I'll have
interesting.
to ask him.
Yeah, right? Let me give him a call. Jack?
All right, so this is past the Twitter IPO now. We're at 10:51 or so Eastern time. We're still waiting. Maybe they're going to go for 11. I don't know. They keep saying 5 more minutes, right?
Yeah, it's like it's like when you're at the gym. A long time ago, I used to go to the gym, and they're like, yeah, just 2 more, and you get to 2,
Right.
just one more, just one more. Yeah, it's coming eventually, I guess. It's gotta happen. Now they're talking 87 by 89.
87. Wow, that's crazy. Yeah, I don't know if I'd get in at this high range, but if you're just going to trade it, it's going to be a wild ride today, I think. That's kind of exciting. But as a long-term investor, which I am, as a value investor, well, there's not much value here. I get that question a lot from a lot of my value investor friends. Can I get in on this? And most IPOs are real high growth names. It's not to say they're all really, really expensive, but usually
Right.
you're buying the growth. That's the whole point. And there's nothing wrong with that, but you're not going to get a value. You're not going to get some kind of bargain on the IPO. You might if you wait, though. If you wait a couple months, as we've seen, even with Twitter, Facebook, you both could get them cheaper several months later. And then some of the others that have been mentioned here, Potbelly's, some of the restaurants have not been that good. You've gotten them way cheaper. Zoe's Kitchen. But some you never really did. Chipotle went public in 2006, and only briefly. It was a few days, like a week or two after, it traded down slightly, and then it's been off to the races, other than during the Great Recession, where it did pull back along with the rest of the market, but it never went back down to that IPO
All it took
level.
was a burrito. Somebody
Yeah.
just had to go there, try it, and say, that's it, this is great.
Just a simple concept. But so it's not always a sure thing to wait a couple months after an IPO to try to get in early, a cheaper level. But, these are all the gambles.
Yeah, again, what type of investor are you? Are you an
Right.
investor or are you a trader?
Right.
So if you are an investor and you wait a couple months and the stock's up another 20% or 30% or whatever, but you still think that the growth prospects are there over the long
right.
run, then fine, go ahead and buy that.
Yes.
And then if it can't even fathom this thing selling off right now given today's action. Right?
Well, doesn't it make you nervous, though, that these insiders can sell today? I mean, it's not the
Absolutely.
whole chunk, but this is unusual. This is like a new thing for an IPO. I mean, when Twitter went public, you weren't like, oh, $10 billion dollars could be sold off here on the first day.
Right.
No. So this could have an impact on where we end up the day.
It's like, if you've got, you woke up today and you're worth $10 million because of this IPO.
Yeah.
And then, obviously you're excited about it.
Right.
Fired up.
Right. Why wouldn't you be?
But then by the time it opens, oh, it's not 10 million, it's 13 million, right?
Yeah.
You're going to be pretty excited, right? And you
But
might
do you
just
get
be
out?
too excited and say, forget it, I'm out.
Yeah, some will.
Yeah,
But we haven't
absolutely
talked
something.
about
But they
this-
only sell a third, right?
Right. Only a third of the insider shares can be sold today. But again, that's very unusual. Usually there is a 6-month lockup period. So it's still a pretty sizable, amount of shares that could be sold.
Yeah, that seems like a lot of the insider structure. That's got to be all Chinese for the most part, and then big institutions.
Right.
Private equity people that I know, they're locked up for 6 months.
Yeah. What about, we haven't talked about the friends and family component of this. That's also somewhat a little unusual for recent IPOs, but I guess, and that's a system where they didn't, the employees have not gotten stock options is what I understand, but the company allowed them to get in at the IPO price. I think it was like 5% of the shares or something. And they could buy that for friends and family, and obviously as a way to reward employees. Like I said, they haven't done this for major IPOs in a while, but apparently during the dot-com boom and up to like 2003, 2004, it was fairly common in IPOs. But what do you think, if anything, that will play into this?
I think if you get your money together from the friends and family, you're buying into the company that you work at.
Yeah.
You probably, most of those people I think are going to stick around. I don't think they're just going to dump it the first day, unless it's just too good to be true.
Right.
If you get a 30% pop in one day, well, okay.
Yeah.
But that's a tough. We think a little bit differently than normal people do, though. I think, and I think the average person that throws some money in there that works at Alibaba is probably just going to stick with it and let it grow over time.
The insiders obviously have more, perspective on what's going on at the company, both good and bad. So I would see it as a little scary if a lot of those friends and family started selling immediately.
It's almost like insider selling, right? You
Right.
kind of be worried, like, well,
Yes,
what's going on over there?
when it's that,
this is
if
the
it's
case.
a lot. But otherwise, you don't really know why they might want the money. As you said, if it pops 30 or 40%, that's a nice, payoff. So
Yeah, it's tough
hard to know.
It's tough to pass up, right?
yeah.
I mean, I wish we all could get 30% a day, right? Even one day.
Yeah. Well, we'll see. We'll see what happens today. Some people might, who even weren't, on the original IPO price. I don't know. It's going to be crazy.
Once it's going to be, I can't wait for it to open and see what the traders do with it. Do
Yeah.
they jam it up higher some more and then wait till the retail bid comes in and then let it go?
Yeah.
I don't know, but it just seems like there's so much demand from all over the world that it's just, I just don't see it having a rough day today. Now,
Yeah.
what about the next couple weeks?
Right.
I think the euphoria of the IPO kind of begins to wear off and people start going, okay, what am I really buying? What am I really getting into?
How many days does that take? Since this is a Friday, you'll have all weekend to mull it. It'll be in the headlines, but will it still be this hot next week?
I think
or-
it depends on how it trades next week. If it stays near the IPO or the opening price, let's just start calling the opening price now.
Because the IPO is nobody's getting
Yeah,
that.
that ship sailed.
Yeah.
If it starts to dip below the opening, then it's like just a whole different mindset comes in. It's kind of that line in the sand where anything above that, everybody's going to be very bullish on it, and we're going to be talking, oh, it should be 200. This thing should be worth as much as Apple's worth, and we'll have all sorts of conversations like that.
Oh yeah.
If it dips below that, then it's, oh, I told you it was worthless, and it's going to zero, and this thing is, So I think you're going to have a very, very distinct line in the sand of people on either sides of that, the bulls and the bears, and one of them I think will go over the top of the other one, depending on where the stock trades over the next few days.
Well, I know a question we get asked a lot on these IPOs, as far as the Zacks rank is concerned. Obviously we need estimates to come in, and the analysts can't provide those for a certain amount of period after the IPO. So this stock won't have a Zacks rank, just to be clear, for a while until we start getting those analyst estimates in. So anybody who's going to our website to look and see, what the rank is, don't be surprised if it says NA for a while. I want to put that out there because we do get a lot of questions from people about the rank and why it is not there. But eventually we will have, and I'm assuming this, but maybe I'll be wrong, will be fairly well covered by analysts.
Yeah, I think it will. Given the size of how many people underwrote the issue, I think you're going to have the major Wall Street firms will definitely be following this. Somebody will. Because like you said before, this is their gauge on China.
Right.
You know,
Right.
so they're definitely going to need to pay attention to what's happening with the inner workings of Alibaba.
Yeah. So the Zacks rank will be coming. You just got to stay tuned on that.
It will be coming.
Yeah, that'll
It
be
will
interesting to see as well, what the analysts think and, what kind of estimates
We're
they're
going to
putting
have
out
to
there.
learn 1 through 5 in Chinese, though.
We will?
Yeah.
Oh.
Because we've got to give it a Zacks rank and then however, in Chinese.
Oh, we do. Well, you'll have to tell me on that one. I'm bad at foreign languages, so.
I'm a little rusty. I usually just point to the menu and go that one.
You
that
just
one.
do Google Translate.
Yeah, when that works, or definitely that. Not Siri, because I'm not an Apple.
Oh.
I'm not an Apple.
Okay, yeah, me neither.
Oh,
So
there you go.
Yeah. All right, so we're at 11 Eastern now. I predicted 11, but so far nothing's happening. It's got to be any minute now. This is pretty late, I have to say, but again, it is the largest IPO ever. There's a lot of things going on behind the scenes, and there's going to be just tremendous demand. So, those computers, the servers, everything's got to be humming right now while they, are probably just minutes away from launching this.
Yeah, and the phones are ringing off the hook, and
Yeah.
everybody's ready and eager and ready to rock and go. But I guess we're still waiting on hearing what's
We're
happening.
getting tired of
That's
seeing
why I
our
keep
faces
checking. Yeah,
or chatting.
I keep checking on the couple on my multitasking here with my phablet, right?
Right, exactly. You got to
going
have
back
two
and-
going at once.
It's funny.
That's why I'm
it's
leaving you
like-
in charge,
Yeah,
because
give-
I couldn't do those. No way.
Let's find
Both at the
let's
same
find the
time?
biggest guy in the office and give him the smallest tablet and the
Look how
biggest
easy it
biggest
is.
phone, right?
They're similar in size almost.
They are, well,
It's
with the
almost scary.
screen.
Yeah.
Look at that. I didn't
Yeah,
even realize
wow.
that. See, now we're getting this is a whole new show.
We're
You
going to have
thought
to have a
this was
show on
Alibaba.
just like technology comparisons.
Just bring me little gadgets and I'll just
Right.
start messing with them. That'll work, no problem. But yeah, still no news on this. But the market looks like the Nasdaq's up fractionally. The Dow's up 45 points. It looks like.
Okay. Maybe it's waiting too.
And the S&P is only up like 3. That's been happening a lot lately. Where I think the Dow's kind of pulling us forward.
Yeah.
And then the higher beta names are kind of just trickling along
Waiting.
with it.
Yeah.
Yeah.
Up, but not as sharply. So a lot of people are predicting this could be the top then, because Alibaba launched at the top in 2007. This could be the top of this market now here in the U.S. Do you see parallels, or does that make you nervous?
No, I think that argument about IPOs does hold some weight, but it's more like if you look at the sheer volume of IPOs that are coming out and the quality of the IPOs that are coming out. So when you get the under the rug IPOs that come out and it's like just why is this company going public?
Right. Like the ones that have no profit and
Yeah, just
are
no
crazy.
chance of making it,
Yeah.
and it's like, oh, here, go ahead and do that. Or you get a lot of the pipes
Right,
that
right.
come out, just these companies that are kind of already out, but they're doing a private offering
Yeah.
in a public entity kind of thing. Then that there's kind of a mad dash for money.
Okay.
And the investment banks know it too. I mean, if anybody knows it, they know it. So they're trying to jam everybody through, get all the money out before the bottom drops out. You're not having that right now. I don't
No.
think there hasn't been a huge surge in bad names. And then again, obviously people are still going to argue back and forth about Alibaba. And I know I threw out the legitimacy of Alibaba, and it was the word of, but, there are still some concerns about that. People
Yeah.
are definitely worried about, can we put this in the same vein as Amazon and trust it
Right.
that much
Right.
with all these weird, loops. But
Yeah. All right, I said I would only bring this up if, we had a really delayed opening on this, but we have to talk about Singles Day. And that's one
right.
of Alibaba's biggest days on its website in China. And people might not even know what this is, because I didn't know until I started reading up on it. And it's basically like the Black Friday of China, but they see double the volume of what the shoppers do here on this day in China. And it's November 11th. Started over 21 years ago, and it's about single people buying themselves gifts, Like,
Yeah,
how genius is this?
I don't. It's right up
Why
there
isn't
with.
this over here?
Well, we're gonna start Give Dave $1 day.
I don't know, like
That's
Singles Day.
happening.
Like, what can be better than that?
No, yeah, it's. I was baffled when I heard the amount of purchases that take
Yes.
place on that day.
Huge.
Up there with our Black Friday, but it's
Yes.
all happening,
$5 billion
over there.
worth, apparently, last year, I think it was.
And so you just buy something for yourself?
Yeah, apparently
Is that
that's
what
how
it
it works.
is?
Because you're not dating anyone, you're not married. So they felt bad over the years. You have Valentine's Day, Sweetheart's Day, you've got all these other days for people who are couples. Why not something for yourself?
I could see that catching fire in the U.S.
Yeah.
I was reading somewhere like the millennials, only like 26% of millennials are married
Yeah.
so far.
So look at this big market.
That's a big market, a big chunk of people that could be buying stuff for themselves.
Yeah. Yeah, I don't know.
Except
Someone
we
should...
can't put it on Veterans Day. They have it on 11/11.
No, they do.
Right?
They do.
So you can't do that. We'd
Yeah.
have to strategically space it out. Let's put it in the summer sometime.
Right, a
don't
time
have
when
a lot
there's
of
not
holidays
a lot
there.
of other things going on,
Yeah,
right?
just like I'm gonna buy something for myself.
But
What
it's
would
amazing.
What would you buy for yourself on Singles Day?
I don't know. I mean, I don't know. I'd have to think about it.
Is it-
I don't
how
know
much
what's
can
the
you spend
popular
on
thing.
yourself?
A lot.
What's the average?
Apparently, I don't know. But $5 billion worth, that's a lot. They also do like matchmaking on that day, and there's like this whole surge to try to find someone on that day. It's just like a whole celebration of singletons and dating.
I'd buy something awesome, I think.
You'd buy like some of these tech gadgets,
The
probably.
tech stuff. I'd
Yeah.
buy something for the car, I think.
Oh, you would?
There'd be something car related.
1,000 of the waxes.
There you go.
You would have
Now you're
you would have a
thinking.
huge supply.
You see,
It would
I'd buy
last
that,
you
but
for
I would
years.
sell that. That's my
Oh, you would.
entrepreneurial vein in me. I would buy that and I would sell it. I'd go,
All right, I see
door to
some
door
business
selling Carnauba
opportunities
wax.
here. That's not good on Singles Day, though. That's not going to.
Carnauba wax? No, it's got to
No.
be fancy.
Yeah, but yeah, I don't know what they do. I'll have to look into that because I am curious. What are the most common items over there? But
It's got to
huge.
just be like something you've been,
Yeah.
you've been wanting to get.
Yeah, I
you
mean,
know,
do you
that-
like you obviously don't send yourself flowers or anything. You buy. I guess you buy jewelry or you buy yourself. I don't know. Everything
Is
because
it? Do you
they
buy, I
sell
don't
like
know if you
100.
could, if you buy yourself like a romantic gift to
I
yourself.
don't know. This is a question.
It's probably something superficial. We're gonna have to dig into this.
I do wanna know.
But the crazy part is the impact that it has on the sales.
Well, yes. I mean, it was like I saw a stat that said it was 175 million packages. They have a huge war room that they put out with a map of China where all the deliveries are going. It's like Black Friday. It's a huge sales day for them, and it's coming up soon.
But you don't have to get up early in the morning.
No, I don't think so.
That's part of the singles.
Yeah,
thing.
it's all online.
So you got to sleep in.
This is the
and
the
then
best thing about
just
it.
have a me day.
Yeah, I wonder if people go to work. I don't know.
You
This
just go to
is-
the spa.
Maybe. Yeah. So it's an interesting, cultural thing, but could be spreading.
I
have to
think
see to that.
we need to start it here.
Yeah.
Oh, we're getting some questions in now.
Oh,
here,
okay,
finally.
good.
They've had enough of our.
Yeah, they don't
Of
want
our
to hear about
Singles Day.
Singles Day anymore.
Some we already talked about the kind of the impact on Yahoo.
Yeah.
But let's look aside from my Kukumani trading strategy here,
Right.
right?
Should you stay in Yahoo next week? That's an interesting thing because everyone was piling into it up through today's launch. And as you said, some might sell to go buy actual Alibaba shares.
Right.
But a lot of people feel that the valuation on Yahoo, you are getting it cheaper. If these shares really pop as we think, Yahoo, even though it's not cheap either at this level, is still cheaper than Alibaba. So why not go that route? And you might get a special dividend or share buyback by Yahoo
I
if
think
you hold it.
Yeah, Yahoo is worth $39 at this is the $68 mark.
Okay.
Is something that I didn't throw out. It was some Yahoo executive.
Some of the
threw
analysts
out.
are saying
Somebody
that
at Yahoo
because
threw that number out.
okay, so that's the Alibaba. They have their own cash separate, I know, and then they have their own business. They are
Right.
making money off their own core business.
But so
combined.
now you've got, heck,
What's it trading
let's
at now?
say-
Do we know? Yahoo.
Yeah, 40. Well, I'll tell you.
All right.
It depends
Gotta-
on you'll
gotta switch
see
over.
if I'm smiling or frowning. in
Uh-oh.
a heartbeat. That's okay. I'm not hating on Yahoo.
I mean, it
in the
was up
long run.
earlier,
I'm just-
according to Eric.
42.48. It's up about
Okay.
1%.
Wow. Okay, so it's just
right
waiting.
now ahead of the IPO.
Yeah.
Yeah. So if it's $39 at 68, and let's say we open at that lucky Chinese number 88, right? Maybe that we should
Yeah.
have figured that out.
Wow. Yeah, you're
we would
right.
have known it's 88.
Just put an order in at 88. You get filled. right away.
Probably.
Because it's going to go
there.
There
You go.
Yeah,
so
they like that.
88.
That's a lucky number.
88. That's the answer. So anyway, so that's so that's another what, 30% almost on Yahoo, right? Or 30%
Right.
up. So, well, 30% on there, 45.
Yeah.
So that's what, 14 billion that you'd have to add
Yeah.
to the 45 billion. If Todd's got me right.
They could buy a lot with all this cash they're going to get. Yahoo. No one knows what they're going to do with it. They will sell. They are going to spin off half of it to their shareholders. But
Now I know why Eric's so excited about Yahoo.
why? Just because of all
Doing
the
the
cash?
math, not going to do
Well,
the math
yeah.
on Yahoo over the long run. And I do
Yeah.
like Yahoo over the long run. I'm just trying to make a quick buck on
Well,
the trade
right.
here.
You're just trading it. You're not a long-term investor.
Well, it's probably blow
but
up
if
in
you
my
were
face
a
today, we'll
long-term, should you be in Yahoo?
It depends on what they're going to do with that money.
Right. There was rumors yesterday, but these were just rumors that they were going to buy AOL. But there's like constant rumors about somebody that they're
But
going to buy.
They always talk about the AOL
I
thing.
know. I know.
And what does AOL have?
I don't
Mail?
know.
Do they still have mail?
Huffington Post, don't they?
Yeah.
I think so. But yeah,
That is-
that would not seem the direction that Marissa Myers would go in. But
Well, how'd that work out for Time Warner?
I know. Yeah.
You know,
Yeah.
it's
Not good. Yeah.
maybe she's got a better plan for it.
Yeah.
I don't know.
Okay, so anything more? Did we get any other questions? Everybody's just bored, refreshing their page, waiting.
We're just getting compliments that we're the best show in the history of the world.
We are?
Yeah, saw that.
No.
Yeah, was that Jimmy Kimmel? Thanks, Jimmy.
Oh.
Um,
Wait, we're going to go to Eric because he has an issue.
Well, recent reports are saying that the stock is expected to open between $89 and $91 a share.
Ooh.
We're still awaiting the actual launch of the stock, but some people are saying it might not go till 11:30 Eastern time now. So
What?
we still could be a bit away. They're still kind of gathering the last bits of information there. So it's hard to say when it's actually going to open right now. At this $90 valuation, the company would actually be bigger than JP Morgan on a market cap level. And if it gets to 100, it would actually be bigger than Walmart on a market capitalization reading. And actually, a tweet I was reading from MarketWatch just a second ago said that they were speaking with TD Ameritrade, and at about 6:45 a.m. Eastern time, roughly half their orders that they had in were for Alibaba stock, and that was about 2.5 times greater level of interest than what they saw on the Twitter IPO date, as just kind of a point of reference here. So, still no real update, but it does look like the low 90s is the projected start date for this stock. So back to you, Tracy, for now, but that's all we got.
Wow.
I
Those
c-
numbers are incredible when you think about it. I
Well-
thought he might say that it could surpass Exxon there for a moment. But you know what that always means? Any company, well, once they surpass Exxon, it's never good. They always fall back and Exxon surges up again. That's happened numerous times.
Yeah.
Like, various tech companies have challenged Exxon and then fallen back. So I thought for a second there he was going to say it might be bigger than Exxon. That wouldn't, I don't know. But bigger than Walmart that's very impressive.
Yeah, bigger than the Beatles.
Yeah. I mean, we all knew this was, going to be large any way you looked at it. But on the surge, some people have got to be concerned about valuation if it really goes up there. But as we said, the first day is never about valuation. It's just about trading.
Yeah, and that's, well, if we can finally get trading here.
I
right?
know.
I can't remember the last time something like this happened where it just got bid up and everybody was so excited ahead of the IPO even hitting the ground running.
Yeah.
I think this is kind of a testament to the underwriters where they price this thing so that the market can tell it what it's going to be versus Facebook where they price it and basically all the insiders took all the cheddar in the Facebook deal. Here they're leaving a little bit on the table for kind of everybody to play in the sandbox, which I think is good.
So you don't think they priced it too low?
No, it's
No, okay.
not too low. Give it a range, because if you got too high,
Right.
then you're not going to get the interest, right? People are just going to scoff at it and be like, oh, you guys are
You're
trying to
nuts.
line your
Yeah,
pockets,
right.
and there's no way it's worth that much. And
Yeah.
here you're allowing the market to tell you what it's going to be worth, and the market's telling you it's worth a lot of money. And I know a lot of this demand is a lot of Asian demand too that's coming in here and pushing this thing up like this. But I don't think anybody thought that we were going to be sitting on 90, because now we're talking.
No. 80 was the running guess.
Right.
90.
So we're getting close to that century mark here.
Yeah.
You know, does it spike up to hit that? I would love to see a time and sales report on this, just once it finally goes through. That's what I'll probably do when I get over there.
Okay.
Just see exactly how big these orders are going to be coming in, and where they're going to come from, and what exchanges they're going to come from, and yeah, nerd stuff. I'm very
Exciting
excited
day for
about.
the traders. Yeah.
Yeah,
Yeah,
absolutely.
a lot of charts, a lot of graphs. It is exciting, though.
And a lot of waiting, though. You
Well,
know?
yeah.
I still,
Everybody-
granted, yeah, they got all these things they need to get in place, but, you know, it's almost like, are they doing this on purpose? Like, is everyone, they're going to do a little, oh, yeah, you thought that was big? Well, this one's going to be even bigger. We're going to launch it at 2 o'clock, you know?
Well, like I said, you know, they had to go past Twitter to at least say, oh, we're even taking longer than that one. So, yeah, but now we're well past the Twitter mark. So there's no doubt that this one, there will probably be some issue with, you know, waiting 2 hours to go to launch.
That's almost where we're at now, right?
I know, yeah.
We're 15 minutes away from that.
Yeah.
You know, so we're talking about kind of the growth prospects of the company a little bit, right?
Yeah.
At $100, I read, $100 on the stock price.
Right.
That was something like 30 times
Right. It's not
2016 earnings.
right, which isn't outrageous at all for any of these companies. These, you know, high growth stocks.
Right, the
they
Chinese
trade
internet
higher.
stocks.
Yeah.
Are just kind of.
Yeah. Even the U.S. internet stocks trade at a higher multiple. So that doesn't seem that outrageous to me if those 2016 estimates hold.
Right. Well, I guess we'll be able to tell if they come down, right? That's where our Zacks
Well,
rank's
yeah,
going
the
to come
Zacks rank will be able to determine that in a couple months.
But, you know, it's at a certain point. Now, how big does this thing get where it just can't keep
That's the other
growing
thing.
like that?
Right.
You know?
They all get like that. I mean, no company
Yeah,
grows at
economies
40
of
or
scale kick in,
50%. Yeah.
And then, but where is that? When is that for Alibaba?
Well, that's the question, because they have, you know, so many diverse markets with their own, and then can they expand internationally? Obviously, there's a huge market there, but even Amazon, which is, you know, international, has had growing pains trying to get into a lot of other markets. Like it's making serious, you know, push into India now, which is a big market that Alibaba would like to get into, but Amazon's getting in there first. It does have competition there, but it's spending serious money to open up distribution facilities there and all of that. All that takes time for the Amazon model. Obviously, Alibaba doesn't have distribution facilities,
Right.
so it's a little different.
Would have been interesting to see had eBay stayed in China, because eBay's out of China, right?
Right.
Had they stayed in China, what would Alibaba look like?
Well, that's the thing. That's the competition factor right there. And they're going to have that when they come here or to Europe, or, I mean, there's even Etsy, for goodness sakes, that's still out there doing well.
Yeah.
So there's a lot of these platforms where you can buy and sell goods now.
So is that the next place to go? Is it India? Is that?
Well, that's what everybody's saying, the expanding middle class there. You know, the fundamentals are good. Some infrastructure issues, which Amazon is running into. But the Amazon's spending several $1 billion to, you know, try to make a go of it there. And especially if they get these drones up and running, infrastructure with the not as great roads system and that stuff won't be as much of a factor if they can deliver by drones.
Well, we might as well, you know, go through the rest of the bricks, right? So what, is there
Yeah.
an Alibaba in Russia?
I don't know.
Anybody know?
I have not seen any indication that they're over there. I've only seen Brazil, but it's such a small push. But the Brazil business was growing at like 140% year over year, but it's coming from that small level. So you have to take that with a grain of salt. But they are pushing into Brazil. But you know, they have some issues there with, you know, their middle class is also growing. They're having some more credit issues and things with the Brazilian economy. They're going to be an issue. I could see them, you know, trying to get into other emerging markets like Indonesia, you know, Mexico. Both of those could be good markets for them. Turkey.
And they've still got to rebuild their soccer team over there.
In Mexico?
In Brazil.
Oh, in Brazil, yeah.
They've
Well,
got
that's
some
going to be a
issues there.
focus, yeah.
Rebuilding from the bottom up.
Yeah. So, I don't know. But
Now
let's,
we're 90, 91 already?
91 it's showing. I don't
This
know.
thing's going to open up at 100.
You think so? A lot of people thought it would jump to 100 initially anyway, so maybe this is not a surprise.
Well, the longer you sit and wait and, you know, put the
Yeah,
two
there's
sides
more-
staring at each
yeah.
other across the table, the higher
you
it's
get
gonna go. You're
anxious?
basically trading without trading right now.
Yeah,
So let's just ring the bell.
right. Get it
Let's
out
get it
there.
started. Was it Duncan Niedermeyer? That's his name, right?
Is that the
New York Stock Exchange CEO?
Oh, I don't know.
It might still be him.
Yeah. Yeah, this is not looking good for them. They said they had everything prepared, but to me, to wait 2 hours to go for the IPO, I mean, as long as it launches correctly, that'll be good. But this is the demand just must be massive.
I think that's
I
all
can
it is.
think.
I don't think there's anything,
Yeah,
any real issue
no.
happening. I think it's just, they just want to make sure they do it right, and there's just a lot of orders coming in, maybe more than they thought
Yeah.
was gonna come in on this.
So, what other companies should I be watching today? Should I be watching Amazon, eBay to see how they react to this, or Baidu even?
Yeah, I think so. I think you got to look at the whole space. You got to look at the Baidus, and what are the Dang, China Dang, or
Yeah.
Fang, or there's a Fang and a Dang.
There's both of those.
Okay, and then there's the double Y, right? The YY is the
I
ticker.
don't know.
That's
I
another
don't know that
Chinese.
one.
So you get.
They're in the same space.
We got to look at the Chinese internet space
Right.
as a whole, which is probably doing all right today. Then you still got to look at the YHOOs of the world, right?
Right.
Let's take a look at Amazon and eBay, how they react to this for sure. But I think it's gonna be a good thing. Where's all this money coming from that's buying Alibaba? Is this money that was on the sidelines that's coming in, or is this money that was already in tech and higher beta names and now is dumping into it?
That's a good question, because there's been a lot of talk even about the retail investor that they haven't really been in this stock rally, and you can tell from the numbers that they're not really pouring money in, but maybe something like this could actually spur more retail investors to get in.
It could. I mean, I've heard a few anecdotal stories of people coming into their Chase Bank and saying, I want to put $250,000 in Alibaba.
Yeah.
But that's few and far between.
Right.
So I just it's just speculation at this point of how is it going to play out over the next couple of weeks here?
Right.
Who's going to buy it? I don't know. John Blank's going to buy it. Right?
He is?
I don't
For
know. He's talking
international
about
trader.
it. For international trader, he might buy it in international trader.
Okay. Well, that is
Maybe. I hope I
big
didn't.
China. Yeah. I don't know.
I just blow his cover, did I?
I
He was
don't think
talking
so.
about it.
He
I can
hasn't
say
bought
that,
it
right?
yet.
Yeah, he was thinking about it.
Yeah.
So we'll see. I'm sure it's valuation
s-
based, though. He's not just
Right.
So it depends on where it's at. You got to look at. I think the Asian market was up a little bit. Yeah, the Nikkei was up last night. Well, a lot of that was the Japanese yen just deteriorating. I think we got up almost to 110, or it was 109, 109 on the dollar versus the yen. So that was kind of the reason for that. But I think we definitely have to look at our tech names here.
Okay. Are there any other big IPOs coming down the pike? This has been taking up so much attention. Usually we get like one of these a year. We had Twitter last year, we had Facebook the year before. I haven't heard of any other big, especially there haven't been any other big Chinese names.
I have, all of the talk that I've heard has been just so fixated on Alibaba
Right.
that I haven't heard anything else from
Yeah.
any other IPO. There's probably something awesome right around the corner that we're
Right.
forgetting about here, right? It's going to just blow our minds like Alibaba is, but yeah, I don't know. I haven't heard anything, I guess
Okay,
that just
thought I'd check.
tells you
Yes.
how excited people are for Alibaba.
Yeah.
All the money's looking that way.
Yeah. What about Google? I mean, we've talked about, eBay, Amazon. It has a little part of Google. I read that Alibaba doesn't allow its sites to be found on the other search engines. So if you're on Google and you're searching for something that's being sold on Alibaba, it won't show up if you're searching on Google. You have to actually go within Alibaba
Okay.
itself. It's like a closed community, kind of like Facebook is closed in that way. And that's how they control, the search and the advertising and all of that stuff on their own site. Does this impact Google at all? Obviously, they're not getting any revenue already, they're not having a connection to Alibaba right now. But is there some kind of competition for Google from Alibaba, or they're in two separate spaces?
For the most part, they're in separate spaces. I think Google's kind of grand plan is way bigger than what Alibaba is looking at. Just Google is like, we're talking mapping
the cars.
First they got the cars. Just go back to Google Maps when it was like, oh, that's crazy. You're going to do Street View of every place in the U.S., or you're going to put the entire Library of Congress on digital formats, and like things like that. They're like changing the world kind of thing, just a whole different. Alibaba's not really changing the world. They might change the way we're buying and selling, and they might be opening up markets, but there's not that groundbreaking, earth-shattering kind of thing at Alibaba that the Googles of the world are trying to do. I feel like there's kind of a more futurist vision, out of Google than you're getting out of Alibaba. Alibaba's kind of more like open this up and make profit and make people profitable.
Okay. So it's just really eBay and Amazon.
I think so for the most part.
Okay.
You do get a little bit of the Google part was the paying to get what you're selling up at the top. Because that's kind of Google. You can pay to get your searches right. In the little ads on the side and things like that. And then eBay's got it where you can be a preferred seller or whatever and push your.
Right.
But
Similar.
it's not as much Google, I think, and I don't know that Google's that worried about Alibaba.
Right.
They're not there yet.
Okay.
I don't think they want to be there.
No, two separate businesses, it sounds like. Okay, it's like we're taking a big tour of all the tech space here.
Yeah, for sure.
While we're waiting.
And then we're getting more questions. These YHOO questions keep coming in of like, why isn't YHOO moving at all when the Alibaba price keeps going up?
Okay.
Because Dave was right. That's what that means. We'll see.
Because they're going to sell Yahoo
Dave's right.
and get into Alibaba? That's what you're predicting?
Hey, that's what we'll see.
Yeah, so the demand, they're done. Yahoo, we were using that as a vehicle. We don't need that anymore.
I think so.
It sounds like that.
I think so. But over the long run, obviously, Yahoo's going to be fine, I think.
Well, right. You have to
If they
see
can
how
do
that all
something.
shakes out.
Well, we'll see what they do.
Right, they're going
We can almost do a whole show on Yahoo and try to figure out what they're going to do.
Yeah, because that's a tremendous amount of cash coming in there. All right,
But
so
it's not
Yahoo
like-
seems to be more the focus. That's interesting, but it's the only thing trading, other than SoftBank, but that's just pink sheets.
Yeah, it's tiny.
So that's small.
Oh, I want to see what SoftBank's
Yeah,
doing.
what's that doing?
Oh, well,
Because it did trade, even though it normally averages about 40,000 shares, which isn't bad for the pink sheets, actually. It was trading, I saw something like 80 or 90,000 shares yesterday.
Okay.
So people were in it yesterday. But I don't know, what it's doing today. I would think Yahoo would be a better trading vehicle just because of the volumes. But
Yeah, because when you start messing around with these pink sheets, just because you want to buy it or sell it doesn't mean that it's
Right.
there for you,
Right.
right away. So there's that liquidity issue that you have, which people see with penny stocks. And I'm not calling it a penny stock because
No.
it trades at $40, but
right.
I love to see the penny stock stories where it's like, oh, it tripled today, on like 1,000 shares of volume, and like if you wanted to sell, you have no chance of selling at that point.
Right.
You don't have that bad of an issue with SoftBank, but 40,000 shares, and you're trading, it's only $40 a share. That's kind of small, but
Yeah.
SoftBank is up 13 cents so far today.
Okay, so that's just waiting too. It's not
Just-
doing much
yeah,
either.
that's not doing much either. Again, there's a proxy theory again.
Yeah. There's an
You know?
interesting story about SoftBank, though. Their founder initially gave Jack Ma $20 million in 1999 as initial investment. So that's kind of paid off for him.
Yeah,
But
yeah,
there's
he's
a
doing all
risk.
right.
I mean, you're giving money to a guy sitting in his apartment, or maybe he was out of the apartment by this point. I don't know. But, that's all risky, and they should be rewarded for it. But it's still an interesting story that you're taking the $20 million up to something like, I saw $11 billion,
Yeah.
something like that.
Well,
He's
heck, now you're talking. Well, Yahoo's got 22%.
Right.
SoftBank was 37, I thought.
right, but this is the founder
Just
who
personal.
personally
Oh, okay.
is
Yeah,
benefiting
yeah,
as
yeah.
well.
You're right.
So
Yeah.
he is going to be among the
In addition
richest.
to SoftBank.
Yes, I
making
believe that's
money
right.
on
Yeah,
it.
yeah.
Right.
So yeah, there's a lot of these interesting little side stories, as you always get, about these companies, of the people who were early in, kind of like Facebook with Peter Thiel being the first, initial investor with his $500,000 that he translated into quite a bit of money as well when Facebook went public. But that's the risk they took at the time.
And the guy who painted the offices at Facebook.
That's right. He got
Right.
shares too. I wonder if there's any stories of that. But this company has been around for 15 years. It's not new.
Right.
That has its pros and cons because, like we said, they already went IPO once, and so they're not that small. So there's a fewer stories of these, people who just got shares on the side.
Yeah, but that first IPO was in Hong Kong,
Right.
which is still a huge hub. But
Yeah.
you know, you go on the big board, you're playing for the Yankees.
Yeah.
You know, so
That's the
this
big
is, that's the big
stage.
time, right?
Yeah.
So they had to make sure they had everything tight this
Yeah.
time around. So that's why it's at $90.
Wow.
All right.
All right,
Somebody's asking
so-
about the impact on Facebook and
Okay.
Facebook shares, and what that's going to do. I know we talked Twitter and we talked well, not Twitter, we talked about Yahoo, but Facebook. I don't think Facebook's going to be really that affected by it. I mean,
Okay.
the internet space. How much does
No.
Amazon affect Facebook? You know, it really
None.
doesn't
No.
ever.
People all lump them all together, though.
Right. It's just
mean,
if
I
I
was-
can click it into a computer, then they must be the same.
Right. I was even thinking when Eric was telling us about the various ETFs and which ones might hold Alibaba, I did briefly think for a moment, well, what about the social media ETF? And then I'm like, well, this isn't really social media. It is much more retail, at least for now. It might have a small social media component somewhere in those 290 subsidiaries, companies, but
There is on Taobao, the buyer and the seller can chat together and negotiate what the price is going to be
Okay.
on the item. So that's kind of where that chat aspect
yeah,
kicks in. But
some
it's,
social.
But it's not like you're like, oh,
Right.
hey buddy, it's trying to sell me the
Right.
Carnauba wax. Like, what are you doing tomorrow?
Right, exactly. So I don't think it's going to be in that particular ETF. But yeah, a lot of these just get kind of lumped together.
Yeah.
It would make more sense to put it among the retailers.
But yeah, is Facebook money going into Alibaba? I don't think so. I don't think that trade's happening.
Is Facebook money going into
Yeah,
Alibaba?
are you going to sell your
No.
Facebook and buy Alibaba?
No.
I don't think so either. I think
No,
if you're
two
buying
different
Facebook,
spaces.
you're buying Facebook for a totally different reason.
That's right.
One thing we didn't touch on that I just thought about was kind of I guess Todd did a little, the mobile space
Right.
with Alibaba. They're having it's a much smoother transition for them monetizing mobile than it was for Facebook here in the U.S. to start
Okay.
doing that. Something like already a third of their volume is going through mobile
But
devices
isn't that just
over there.
because these other companies were kind of the early people into that, and now they've learned from what the other companies have done?
Yeah, I think so.
Yeah.
Yeah, that's definitely part of it.
But wouldn't it make also sense, being that China's their largest market, that much more would go to the mobile?
Are they more?
Yeah, they're
Yeah.
much more mobile-centric than we are. So that would make some sense.
Well, now that we've
But I
got-
don't know about the transition to it. But it sounds like,
they're
they
saying
knew
something like
that
30.
would be, given the problems that Facebook had, that this is their huge market and that they have to get it right.
So
Sounds like it's working.
like a third of it.
Yeah, that's only going to grow.
So is that going to contribute to the death of the desktop?
I don't know. Everybody's been saying that it's going to die for forever, but they just had some good numbers this last quarter.
I think
It's
that's 'cause
resurging.
There's a bunch of fuddy-duddies, and I'm one of them. Like,
Who have desktops?
yeah,
Of
I want a
course.
desktop, and-
Yeah.
and I like having the whole setup, and it's fun.
Are we lumping laptops with the desktop now? Is that the same thing now?
Well, so
so
let's do
anything
that.
other than a tablet is under desktop.
Yeah, because
Okay.
you know,
Those are all old now.
well, yeah.
Fuddy-duddies.
When
using that.
when you're looking at mobile, you don't think
Right.
laptops.
No,
you know,
you're not really
you're
carrying
just
that around.
like this thing, although
Right.
it could be the size of a laptop.
Yeah, mobile's that and that.
Right.
Tablets. But tablets have, this last quarter, companies said that tablet sales have gone down, even iPads. They've shrunk some,
I
so
think
it
that's
can't
'cause
be
of
all
the
the dead
phone
of the
thing.
laptop. You think everybody's moving to the phone instead.
phablets.
Yeah, well maybe.
I love that word, phablet.
Yeah. It still amazes me the amount of retail shopping that's done on the phone. That's where
I
these
put up my
companies-
first eBay item on mobile the other day.
Wow. Wow.
Yeah, I
Was
used to
it
always
easy?
do it. It was easier than doing it on the computer.
Wow.
The computer, I think you can do more, so the user interface is more complex on the computer. Whereas this, they kind of water it down, and it's very
Right.
fluid. It just do this and this
You
and this.
can only
and
do
this
the
and this.
basic steps.
It was super quick. I took 4 pictures, and put it up there. So if anybody's looking for a nitrous plate for a
Oh, boy.
99 to 04 Mustang,
This is
it's
a
on
car
there.
thing again. Oh no. I know
It's
where
on
this is
there.
going.
But yeah, so I put it on there yesterday, and it was so fast. It was like 5 minutes.
Wow.
It was
Well,
super
that's
quick,
that's the secret of the
and it was
mobile.
free.
Yeah.
Because eBay just gets it on the way out now.
Yeah.
For most things. You
Speaking
don't
of
have a
mobile,
listing
Zacks has its app for both Apple, and finally we got the Android. So you and
We
I
got
can
the
get,
Android
yes,
app?
we can get it finally on our phones.
Oh.
It's a great app. You should check it out.
I'm gonna download it right now.
Yeah. Yeah, a lot of those.
Is it on the Google Marketplace, or where can I find the
Yes.
Zacks?
Yes, you
the
can.
Zacks app.
Yep. Just type in Zacks.
There you go.
It's a good app.
All right.
But yeah, you can also find, on Zacks.com, you can find it on there or in the Google Marketplace, but, check it out on there. But it's a lot of information. And that's where everything seems to be going, easier to use than on some of these other just general websites, as you said, like eBay.
Well,
You're just getting exactly what you need.
It looks like we're creeping up again, 92 to 93.
Wow.
We
So
seeing that?
it's kind of like the longer it doesn't launch, the worse it gets.
Because it's like it's trading already.
I know.
It's trading on its own right now, basically, and wow.
We're going to go back over to Eric because he might have an update on kind of what the delay is here.
Yeah, well, rumors are, as Dave kind of just said, it's supposed to open at $92 to $93 a share. I've heard that it could be as few as just a couple minutes away, so hopefully here before 11:40 or so Eastern time, we'll get the actual first trades out there. Still no real word on what the delay was. Rumor is some of the big companies only got about half their shares filled for their for their books, so it seems like there was definitely very strong demand. So hopefully, once again, it's just another couple minutes away, but not really sure what the delay is beyond that, and the huge interest in this company going public. Just one other thing to note: I was reading that Jack Ma, he owns about 7.3% of Alibaba. I know you guys were kind of mentioning that earlier, and if the shares do go to $110 a share, he'll actually become one of the 20 richest people in the world. So I'm sure he's rooting for that a little further increase there. So we'll have to be on the lookout for him. Obviously, he was very, very rich before this, but could be very rare company if shares do spike above that 110 level. So hopefully, once again, we'll have an update in just the next couple of minutes. But until then, we'll go back to you guys for the last couple of minutes.
Cool. Finally, right?
Yeah. I mean, it's been crazy. Good thing we're getting these updates because this is a long time to wait. $110.
Imagine doing this in the old days, right?
Yeah.
We didn't have all these fancy
Right.
tablets
We wouldn't
and
even
things.
know kind of what was going on. We might be watching television to see.
We
That's
wouldn't
where
have
we'd
a
know.
Zacks.com though. Probably.
No.
So
No.
it doesn't matter.
Well, right. Well, it depends on how olden days you're talking.
We'd be yeah. Never read ticker tape. Never had to do that.
Oh,
Like the actual
wow.
tape.
Yeah.
That'd be pretty cool.
Yeah. That's
But
really olden days.
I remember watching Channel 20, watching the infractions.
Yeah.
Right? Coming across the screen and staring at it for so long that when I looked away, I almost fell down because the room was still moving.
Wow.
Just staring at the tape.
Did you ever have a time when you actually saw the tickers, and went to go see what your stock was priced in a newspaper?
Absolutely.
Okay.
Oh yeah.
Just gauging here,
Oh yeah.
because
Absolutely.
that's been a while since that was around.
Yeah. Yeah. Wall Street Journal. I used to dig in
Yeah.
there and take out my little highlighter
Yeah.
and highlight where they were.
Yeah. It's exciting.
I was never old school enough to actually hand chart though. I know guys used to hand chart.
Wow.
That's crazy.
Yeah.
Like every day you get the paper and you got your
Wow.
what do they call it? The grid paper?
Yeah.
What do they call it?
Yeah.
And then you sit there and you draw in like, oh, we've been here. Like luckily that was before my time.
Wow.
I don't know
Yeah,
what would you do?
that's a lot
How do you
of-
do technical analysis when you got a pencil and grid paper?
Figured it out. Yeah.
I don't know.
A lot has changed. That's why we're having this company. Everything is done online with this company. That's a big difference between it and Walmart or it and Amazon. It's like the next incarnation of retail.
And it's I mean, their brick and mortar locations are just like a corporate office where they're
Right.
managing their servers, right?
Right.
Basically is all it is.
Right.
So their actual, investment in upfront dollars that they'll have to do is minimal.
That's right. That's what
But
makes it
isn't
so
that how
interesting.
Amazon well, I guess Amazon always had the warehouse for
They
the
always
books,
had
right?
to have the books. They used to do it out of their headquarters and literally go down into, the conference room and pack the boxes. So that's a very different model because they're not packing anything at Alibaba. They're just having the person ship it direct.
Is there any advantage to that, you think, for Alibaba in the future? to have a warehouse that they're going to have certain goods at, and go ahead and
Oh, to try to go the
try to
Amazon
go a little
model?
bit in certain. Yeah, is there any instance where they should be doing that, or do you think it's just like forget about it? If it ain't broke, don't fix it. You
I
guys are
don't
already
know.
making money.
I think they may have to go to that if, you know, they're having distribution problems or something along those lines. I don't know though, because that is, you're talking a big, as Amazon has shown, a big investment in infrastructure at that point.
I'm almost, I don't know what I'm more excited about. Now, granted, this thing going to 90 or $100 before it even opens, that's one thing. But I'm saying long term, the company in general, getting these kind of networks together where they may have just stumbled upon being the FedEx of China.
Well, but they're not actually doing the delivering. You know, FedEx has the airplanes.
Right, so
and
they're just hooking it up. So then
they're just saying,
they're
hey,
like
that
Uber
guy's
then.
going to ship it to you.
They're going to be the Uber of.
Kind of. Well,
there's one. There we go. We're talking about IPOs of the future, right?
that's right.
We could
Forgot
have
about
a
them.
Uber
There's some
in the
rumors
future.
about that. Yeah, you're right.
Well,
There's-
they've already done several rounds of private
yeah.
equity financing.
Oh, yeah.
And I think, what do they value them at? Some absurd amount of money.
lot.
I thought it was like
Billions.
$80 billion or
Yes.
something like that. Or
There's a lot of talk in Silicon Valley about Uber. So you're right. That could be maybe one of the next big ones.
But then
We'll have to
they've
see.
also got all sorts of legal issues around the world that they're fighting.
That's right.
So that's what they need that money for. They need that war chest to go out and fight those battles on the street.
Yeah. Yeah, there's a lot of regulatory issues with them, obviously.
And then now you've got competition. You've got Lyft and Sidecar,
right.
and there was another one that I saw that was strictly cabs
Oh,
that I got a email for and
know that
immediately
one.
deleted. It was just too much. I'm like inundated by all these random emails. Like
Yeah.
how many different ride share services could I possibly have?
right. But that's the competition that we see when there's, you know, success in an area. That's why I'm wondering with Alibaba, what's the competition ultimately going to be there? Because it's going to be there, no matter if, you know, it's communist China or not. It's going to have, somebody's going to try to challenge them.
Right.
But for now, it's pretty dominant. You
You know,
gotta
I know,
like it.
and we talk about they get this whole it's communist China thing, right?
Yeah.
And that's what a lot of investors are afraid of.
That's right.
Right, communist China, especially when you think back, like Cold War
Right.
stuff, right? So you're in with what's going on in Russia and the U.S. right now, and this kind of tug of war, and Europe also. Those thoughts are starting to creep back, you know,
Right.
into the public domain. But people still have this like thought of Red Square and like in China and like,
Right.
all this stuff going on over there, and so they're still worried about the government coming
Right.
in and just being like, you know what? No, hey, you thought you were going to share your profits over there? I don't think so. Like,
Right.
not happening. Is there honestly a risk of that happening here?
Sure. There always is, with any country, any government. So yeah, that is one of the risk factors that's out there. And I know it is weighing on some people's decision whether or not to buy this company.
Have they done stuff like that before with any of the other stocks that we've got out there?
I don't know. But there has been issues with some of the more dominant companies like Baidu in the past with government regulatory issues and
Because if they start, I want somebody to tell me ahead of time so I can
Okay.
go short. Let me know.
You might be the
what's
first
gonna
to know,
happen.
Dave.
Yeah, me and China are like this,
right.
and it's going to be no problem. I think in celebration of this IPO, we're going to go to Bao.
Oh, we are?
You've been to Bao? I'm going to Bao.
No. That's
Let's do
a
it.
Chinese restaurant
It's
here in Chicago.
it's not like a Chinese restaurant. I wouldn't call
Well,
it
it's
your
fast food,
traditional
isn't it?
Chinese. Oh yeah, wait, today's your Panda Express day though.
Yeah, but that's China.
Is it?
Well, Panda Express.
Is it?
Sure, Chinese American style
Okay.
Chinese food.
Okay. But no, Bao gets you these little
Yeah, you're getting the
like these dough.
Yes, the dim sums and all
Yeah.
that.
Oh man, I feel like that's. Although I don't know what the special is at
They should have an Alibaba special
Panda. Ooh.
at the Wow Wow. Too late. We should
There
have
you
told them to
go.
do that. Cross marketing.
Yeah.
Yeah.
See, they could, and it's right there by the Board of Trade too. They're getting a free commercial here.
Right.
Man, I better get a free Wow Wow when I
Yeah,
get in
we
there.
must be getting closer to lunchtime here.
I am growling.
Food keeps coming up.
That's not the construction. That's my belly. That's been growling this whole time.
Yeah, I mean, who knew? Okay, we're almost at 11:45. I thought they said any moment now. We're still waiting. No, and we're not even trading it. Imagine the traders. They got to have, itchy fingers. They're just waiting, and they keep refreshing the page, and it's still waiting.
Yeah.
It's not good. It's going to be crazy on the open. I mean, it normally would have been anyways, but it is. I feel like the anticipation is really building here now. Nobody can go to lunch. It's like almost noon in East Coast in New York. They're all waiting down on the floor.
Yeah, everybody is waiting.
Yeah.
They're going nuts on the stock twits now. Of just, is it over yet? How many of you have bags in your hands?
People must be watching us. Are they done yet?
Yeah, there's guys on the floor standing for hours. Just do it already.
Right.
I can't take it. The
Right.
anticipation.
Some people they got to bring some chairs in soon. You can't stand this long.
Yeah, well, look. So looks like Yahoo's at 42.15, up
It's
only
still-
7 cents on
Wow.
the day.
So it's still just literally doing nothing.
It was up
waiting
a
there.
% ahead of this.
Waiting.
While the IPO keeps pricing higher and higher and higher and higher, Yahoo shares are going down.
Well, they're not down yet.
Well, they're down from their highs.
Well, from that.
Yeah,
You always
we'll
say
see.
that.
We'll
but
see.
they're not in the red yet.
Put the spin
They're
on
on
it.
pause.
And let's see what else. SoftBank is up just 4 cents.
Okay. They're all
And
know it's
we're
coming
just-
shortly.
We're just waiting for the Alibaba IPO.
Yeah. And waiting and waiting and waiting. This is how it works, live TV, man.
So
You don't know when these things are going to go. This is a lot later than anyone anticipated, obviously.
got some questions on if this will impact any other tech names, more traditional tech names. I guess.
A Microsoft or
Yeah, the bigger,
Oh.
the bigger the older. The bigger the older, the better.
the old guys.
How about Oracle, right?
Well, yeah, they're in the news now too. We got Larry ejecting out of there finally. He is 70, so you got to retire at some point. But is he really retiring? I heard he's going to be on the conference calls. That's not
Oh,
retiring.
So he just
Maybe he'll
it's
be
a
on his
title
yacht
thing.
somewhere.
He's
I don't
just
know.
Like, I won't do that. I'll just do that.
Well, yeah, and they have been slowly turning over a lot of duties to the new co-CEOs. So I don't think anyone's completely surprised by that. But yeah, it's a new day in Silicon Valley though once Larry Ellison is no longer the head of Oracle because he is the old guard. 1970s he was with Steve Jobs
Yeah.
early in the Valley. He's one of the old, that the younger founders can all go to for advice. They still can, obviously, but it is a changing of the guard for some of these older companies now when their CEOs start leaving. There's a lot of talk about when John Chambers might be retiring. He's not the founder of Cisco, but he has been CEO since 1995, and I think he's worked there since maybe 91 or so. So you can kind of put him in with the old guard too, but just not a founder old
when
guard.
Jack Ma was teaching English.
That's right.
See?
He became CEO of Cisco.
It's a long time ago.
Yeah. So, and then there's Jensen Huang at NVIDIA. He is a founder, and he's been there. He founded NVIDIA in 1991. He's still young, though. He's only in his 50s.
Okay.
So he's kind of going to have to take up the mantle of the remaining old guard. But a lot of, you'd be surprised. I used to work in Silicon Valley, and it seems like this big place, but it really is small, and those CEOs really do talk to each other and email each other and whatever else technology they're using these days.
Do they
but
run into each other?
Yeah,
You think
they
there's
really-
like
yeah.
a fantasy football league for the CEOs?
I don't know about that. I don't know. You'd be surprised, but they really do, consult each other and or are in competition with each other over all these years, as we've seen many times in various interviews and stuff. Things have been said, but there is a camaraderie there in Silicon Valley that now is losing a portion of that with Larry Ellison retiring.
I can see them like racing through the parking lot to get to the Chipotle door first and like pushing
Well, I don't
each
know
other
about
over
that.
and running fast.
I don't know. Chipotle's recent, that
Oh, yeah,
wasn't
that's
there
right.
until just recently. So back in the day, I don't know what it would
Yeah,
have
what
been.
was it?
We're talking
I've
like
never
1980.
been to Silicon Valley.
Well, it's like anywhere
Ever.
else, as the Walmart and.
They won't let me in.
Yeah, it's not big though, as everyone thinks it is. So but yeah, that's an interesting tech story. But so how does Alibaba impact them? I don't think it really does. As we've already talked about Google, and even Microsoft up in Seattle, but otherwise, I don't think the cloud area. But that's such a small part of their business, as Todd was saying, that, you know, retail is really where it is. eBay is in Silicon Valley. That would be the biggest impact, really. But eBay is a dominant feature in the U.S. market and even, you know, overseas in Europe and things. So, and they have worked, as you've talked about, the counterfeiting issues and fraud. eBay has had the similar problems over the years, but it's worked hard to, you know, get a lot of that stuff off of its site and to have, you know, a lot of trust by the consumer in what is bought on eBay.
Right. And I was looking at the ownership, and we know Jack Ma, right? And we know SoftBank owns a big chunk. YHOO owns a big chunk. But some of the smaller owners, I saw a graphic where the China actually owns like $750 million.
Wow.
Worth of.
In their sovereign fund, you mean?
Yeah, and that's at $68. So now
Okay.
that's more over $1 billion
Yeah.
worth. So they've got a little bit of skin in the game, which I think is good. You know, for that should help to ease us a little bit when we're like, oh, what if they want to shut it? You know, why
Sure.
would they want to shoot themselves in the
Well,
foot
right.
like that?
Why
But then again, do they?
kill the golden goose, you know,
Yeah, but
or whatever that phrase is.
right.
Kill
But
the
like,
goose that laid the golden egg. That's what they don't want to do.
right. But
Yeah.
why? But why not though? You know, they don't have to be logical and profit driven. They could just say, no, we're in here because we can. We're
Right.
China. Boom, whatever.
Right.
It's over.
These are the risks.
Shut
Right.
off the spigot.
Right.
And that's that's the part that people are most worried about with that variable interest entity that we've got over in the Cayman Islands.
Right.
You know, plus we've got all the stigma of the Cayman Islands companies too, right?
That's
so,
right.
So they've got, you know, they're literally like a postage stamp on a wall in an office in the Cayman Islands, and that's
Yeah.
where this thing is going to.
Yeah. Okay, I think we're going to have an update from Eric. Maybe, is this good news, Eric? Is something launched?
No, not good news, unfortunately.
Oh,
We're
my
still
gosh.
waiting. All the sources I've been checking keep saying it's imminent, and I guess traders on the floor are saying it's happening soon, but you know that was like 10 minutes ago, so we're still waiting here. But I guess the question I want to bring up is, you know, is this kind of, you know, huge wait here really going to be bad news for the New York Stock Exchange now when it's trying to get new IPOs in the future? Does this kind of swing the balance back towards the NASDAQ in terms of trying to get these new IPOs? I know that's one aspect we haven't really talked about is how will the exchange stocks kind of, you know, be performing here in the next couple of weeks and months, given this, you know, extremely long wait. And I mean, hopefully I'll have a final update for you guys in a couple of minutes, but, you know, until then, I think this is something we should probably examine.
That's a good point, because the NASDAQ took a lot of heat for the Facebook
yeah.
IPO and the snafus that happened during that one. Twitter went more smoothly because of the focus on making sure it went more smoothly.
Right.
This isn't going badly, but I mean, this wait is just enormous. This is just beyond what anyone anticipated.
The problems with the Facebook IPO weren't just like, oh, we've got to wait.
Right.
You know, so that's
Right.
something that's important to point out. Yeah, you know, obviously we want this thing to kick off so we can go get our wow bow, right? But
Right.
I don't think this is necessarily a negative though. Right now, just
You
kind
don't
of
think
waiting
so?
around.
Waiting
Let's go.
almost 2.5 hours?
It's anticipating. Keep the people waiting. You know, give them what they want eventually.
Yeah.
No, I don't know. Yeah, I would have loved this thing to kick off at 9 o'clock and let's just get
Right.
it over with and be
Right.
done. It's because of the Facebook IPO that now we've got all these thoughts creeping into our head. Like, okay, what if after this thing goes IPO, it's not going right, and then we have another debacle like that? And I'm sure they're worried about that down on the floor. I think this is much more a precautionary thing than anything. Really, they're waiting for orders. It's not like they're saying we're having technology issues. You know, nothing like that. They're just waiting to get everything together and all the players in line. So it's a nice, safe, and easy, orderly open.
Is it possible that you can have a too big IPO, and that's what this is showing? It's too massive, that no exchange could actually handle this and the kind of volume and demand.
You know, how big is too big? In the day and
know.
age of
I know.
technology and what we have now,
You would think
know,
it
it's
would
all,
not.
Does it matter if it's 100,000 or 1 million or 10 million shares? That are,
Right,
that are
but here we sit 2.5 hours into it, so clearly it must matter.
I think it's more. It's more of getting other people, the other Wall Street firms, their ducks in a row, giving them a chance to go ahead and get everything together.
But wouldn't they have
versus
been
just the
doing
exchange.
that already?
Yeah, they've been working on
Yeah.
it for a while, but you know, it's
So I don't know. To me, somewhere there's a breakdown. If I'm Uber executives thinking of an IPO,
Right.
which would be pretty big, I'm assuming, just based on these crazy valuations that they're putting out there, I would be looking at this, and I would be like, maybe the NASDAQ is the place
Right.
we need to be going
But I
back
think
to.
part of it, there's a lot of decision making going on behind the scenes right now too, because you're going, hey, we're gonna do
Right.
68, and now we're talking 99. What do you want to do, or 90? So anyway, it looks like we got
We're
some
getting
news
some
going
thumbs
here.
up. It might be going. Eric, is it launched?
We're seeing a couple different reports. Zero Hedge was saying it was at 92.70 open, and then I saw another one was 93.90. But it does definitely look like Alibaba is finally a publicly
Oh my
traded
gosh.
stock here in the U.S. So, it took quite some time, but it does appear they're trending a little higher right now. But we'll have to see what the volume and some of the other orders are like. But after a very, very long wait, we are actually live with Alibaba right now.
Do
So
we
back
have
to you,
Yeah.
Tracy?
We got to see what this first where this first
Yeah.
trade went out at.
Yeah, and I'd like to know what Yahoo's doing now that it's finally the other one is trading. Those are the two key ones to look at. But it's just got to be, massive volume in there. So
I'm seeing it looks like
everybody's finally free.
it looks like 92 might have been somewhere
Wow.
around there.
So above, again, a lot of the rumors were that it would go around 80. So 92
Right.
is much
So
bigger
your limit
than-
order at 80 is not getting filled right now.
No, and
Right.
I talked to some people yesterday. They had the limit order at 75, so that wasn't going to work either.
Not right now, no.
Even 88 doesn't seem to be working if you,
You
have
know,
the
maybe-
limit order
maybe
at
it'll-
magical 88. Okay, we're going to go back over to Eric again too because he has some more information.
We're actually seeing from the Wall Street Journal that the price is now above $95 a share for Alibaba, and Yahoo is actually trending basically flat right now. I think it was up about 14 cents. So it's kind of right around its open price right now, despite the huge increase for Alibaba, from its initial IPO price to its current price right now. But that's pretty much all we have for now. It is out there, so definitely take a look. And that and Yahoo seem to be the two most heavily impacted. I'll be curious personally to see what happens with the New York Stock Exchange and the NASDAQ after this extremely long wait, and if there were any technology issues behind the scenes that maybe we just weren't aware of here, but kind of played a role in this huge delay. But that's it for now. Back to you, Tracy.
Yes.
Great, thank you, Eric.
Yeah, the
It's good
official-
to have these, quick updates as fast as we can.
Yeah, official opening price 92.70.
Wow, and it's moving higher. It sounds like. Okay, we're going to conclude our coverage now that it's launched.
That's
'cause
right.
we haven't got any more questions in,
Go
have we?
nuts, go make a bunch of money.
Yeah, everybody needs to go watch it now and trade it if that's what they're going to do. And we will be watching it, obviously. You're going to rush back to your desk and watch both Yahoo and Alibaba, and I'm going to do the same. And you can check back in at Zacks.com because we may have some updates if, some more developments happen. We can possibly do a flash update. So check back on Zacks.com for further news. And I would like to thank Todd and Eric for giving us, information behind the scenes here and for all their great commentary, and for our production staff that's behind the scenes that you can't really see, who have been working all morning long to make this event happen. So from everyone here at Zacks, thank you for tuning in and listening to us gab for 2.5 hours, but Alibaba is launched. Thank you.